the crisis kicks off, the money printing continues. And I assume when you think about money printing, an analogy to use would be a rubber band that's being pulled farther and farther back. And every failure releases tension because those people, they lose and we don't have to make them whole, and there's no more printing. It's not inflationary. And every time we print more, there's more tension, more tension, more tension. Is that how you look at that? You're waiting for the domino, the regional banking goes, the Fed decides they're going to bail them out. We pour a ton of money into the system, and you're just waiting for that moment where there's too much tension. Do you see when you say a big disturbance happens, do we just load up more tension on the rubber band, but we're still, who knows, 10, 20 years away from a real crisis? Or do you think it has to break, and that's why we go into a Great Depression style problem?
So I think we've moved the crisis upstairs to the sovereign debt markets. And so this crisis will be the buyers refuse to buy long end bonds of a particular government, because every government's in the same sort of position. Different things can set it off, but again, global debt to GDP is 360%. Why on earth would I, as an investor, own a long end bond when I know that there's nobody getting born and there's not going to be an energy productivity miracle? There's just no way for me to get paid back in a real dollar, a real yen, a real renminbi at a rate that's affordable for the government for me to make money over time. So then why own these bonds? I'm perfectly happy to sit in overnight, Fed deposits or short end bonds of a particular country, because I know I can just sell those pretty quickly and not suffer any sort of capital loss. But if I'm forced to sell a 10-year treasury or a 10-year Chinese bond or a Japanese government bond 10, 30, 20 years because rates have gone up, I'm going to suffer a massive capital loss. So then why even own that stuff? And if nobody wants to own the long end of the government bond market, the rates will go up a lot. And then the response is some form of either closing down the banking system, so making sure that depositors cannot flee to other asset classes, and then forcing deposits to buy government bonds. This is called fiscal dominance. This is a theory. Or the next thing is called yield curve control, where the central bank says, okay, we know you all want to leave this market, so we're going to fix the price at a particular level, whatever is politically expedient, whatever is affordable for the government. We're going to telegraph this, and we're going to expand our balance sheet infinitely to make sure that the rate stays at that level. So in Japan, the Bank of Japan has been doing this for almost a decade, where they say they determine a band of the yield, and they say if the yield gets to a certain level, we will go into the market and buy bonds by printing money to make sure the yields don't go up. The United States did this back in the late 40s and early 50s to pay back the debt from World War II by capping long-end treasury rates, 10-year rates at 2.5%. The Fed was expanded its balance sheet to make sure the rate is that level. So if we get a revolt from large asset holders who say, I don't want to own these long bonds because I know mathematically there's no way for me to make money in a real basis, I would rather own stocks, I would rather own crypto, I'd rather own oil field, I'd rather own gold, whatever it is, then the only response is to move to the end game, which is, okay, we fix the yield and we just print money until as long as it's required to keep the yield at that level. And once you've gone to yield curve control or something similar in the US, it's already in Japan, something might happen similar in China and other places, then the question is, okay, can the authorities keep the money inside their banking systems, or are there ways for us, the people, to get our money outside of the system so that on a real basis, we're able to maintain our energy purchasing power? And that becomes the real fulcrum of the crisis, because if all the money is just sitting in the banking system and they can't leave, which has been able to do prior to Bitcoin and some of these other blockchain-based cryptocurrencies, then they just tax us all, and over time, the government basically earns itself out of the situation. Yes, there's high inflation, depending on how your country is structured. Maybe it's hyperinflation, maybe it's just high inflation, and some governments fall, some governments stay the same. But at the end of the day, the government can survive. But if we, the people, can get our money into a type of money or a type of asset that's outside of the government control, outside of the banking system, then the system collapses.
Well, that is a very unnerving thing said very calmly, Mr. Hayes. So okay, how give me like the odds here. So if Japan has been doing yield curve control for a while, for a decade, you said, I've been to Japan. It's amazing. So is there really a problem? Because it sounds bad, but having experienced, if my time in Tokyo is what yield curve control looks like, it's not so bad. So what am I missing? Why is that something to be very wary of?
So I think people have mistaken the fact that we've been able to print so much money and not have an adverse effect. They're not looking at what has changed in the global economy over the past, let's call it 20 years. And what has changed is China. China joined the WTO in 2000 and essentially became the workshop of the world. And so you've lowered the cost of goods across every single sector because of China. And they're willing to, number one, degrade their environment to capture market share in a lot of the dirty processing, so rare earths, different types of commodity refining that the West and Japan are not willing to do. They have had a growth of young people willing to go into factory work and do these things at a very cheap wage. And that is it. We don't have China anymore. China, number one, is dying, just like everybody else. Their population is like forecast to be half of what it is by the end of the century. The population in China has also decided that they do not want to live in a smog-filled factory, and they have told their government to prioritize protecting the environment, which basically means that China does no longer want to essentially pollute itself so that America, Western Europe, and Japan and Korea don't have to, right? So we're going to make these things more expensive, and so there is no more big country that's going to join and essentially degrade themselves so that the rest of the world, the rest of the very developed and rich world, can enjoy a higher standard of living, all the while they're printing a bunch of money. So there is no more, that's just not going to happen again. And so I think that's what people miss about why we were able to print all this money over the last 20 years and not really have any sort of adverse effects. That's just not going to happen anymore.
Well, so I'll ask maybe the uncouth question, but the obvious question. So India is still growing. Is there, because the thing that I'm dancing around is being right about the concepts, but getting the timing wrong is the same as being wrong. And so what I don't want to do is get myself all worked up that, the sky's falling, this is all going to be bad. I need to get my money out of the banking system. I don't want the government to close the exits. I don't want them to force me to buy things. I want to maintain my financial autonomy. I want to maintain my freedom. I want to come and go where I want. And certainly there are many, many, many horror stories throughout time of governments doing that. And if there is a way to keep this party going, again, I'll just use Japan as an example. My whole life I've heard Japan is in stagflation. But again, being in Japan, it's beautiful and lovely, and there are wonderful restaurants and exceptional people. And for me as a storyteller, some of my favorite storytelling comes out of Japan. Like there just doesn't seem to be, and look, I've never lived there, but there doesn't seem to be downsides. It's not like I'm like, oh my God, I would never want to be in Japan. I'm like, this fucking place is amazing. So I hear your point about China and China, the just booming growth and the amount of things that we were all able to reap the benefits of as the developed world a little bit ahead of them, we were able to reap the benefits of their transition period, which is just astonishing. To have been cognizant while it was happening was really something magnificent. And look, I was far removed, but still had a sense of how extraordinary their growth was. Are we not poised to see the same thing in India?
So on the Japan thing, because this is called the widowmaker trade. Oh my God, Japan's dying. Oh my God, debt to GDP just only goes in one direction. Oh my God, the BOJ's balance sheet is going through the roof. So Japan is essentially just like China. Japan is a more successful version of China. They both have run the exact same industrial playbook. Japan had 2 nuclear bombs dropped on it by the United States. And the US essentially made it a colony for a bit. And so what did Japan do? They reoriented themselves to making shit for America. And essentially the Japanese government and the large companies made essentially a pact which said, okay, we're going to give all the people jobs for life. You work really hard for the nation of Japan to make things, to grow the prosperity of the country. But you're not going to keep all of the productivity gains, right? That difference is going to go essentially to these large companies, and they're going to reinvest that profit back into the United States and Western Europe, essentially. So if you look at Japan as a country, they're one of the richest countries in the world on a net investment portfolio perspective. They've got like $1 or $2 trillion worth of assets. What are those assets? That's essentially the productivity gains of their people over, since World War II. So Japan has this buffer of money that can cushion themselves. They owe the money to themselves. It's not as if the money is owed to the foreigners out there. You really can't buy Japanese debt in large quantities. So yes, Japan is a unique situation where, number one, they have a lot of assets. Number two, their banking system is relatively closed, right? It's not as if Saudi Arabia can go in there and buy $1 trillion worth of Japanese bonds. They just won't let them do it, right? Because they don't want the situation that the United States is in, where essentially capital holders determine the policy of the nation. And number three, Japan has been very fortunate to use the labor of China and Southeast Asia to reduce the cost of labor. If you look at the major Japanese trading houses and manufacturers, and if you go around Southeast Asia, you see there's a lot of Japanese companies who have factories in all these countries employing all this labor that's very cheap versus the very expensive labor in Japan. Japan's a very special case. But again, all that's running out because the countries that did not benefit from the last 80 years are like, well, why am I the donkey for Japan to make a lot of money, or the United States or Western Europe? I want high wages. I want to live in the Hollywood movie. I want more energy consumption. I'm not going to sell my resources to these other countries cheaply anymore. And so inflation in Japan is actually for the first time rising. It's at, 4 or 5% highs in 40 years. The Asahi for the first time in 30 years raised beer prices, right? So the problem is when inflation shows up. And so when you exhaust the cheap labor, when you exhaust the cheap energy, when you sell down all of your trillions of dollars of assets, and inflation remains in a world where the United States is not able to dictate the flows of energy unilaterally, then your special circumstance, since the collapse of your equity market and property market since the late 80s, is no longer valid. And so I think people are making a mistake by not understanding why Japan is successful to say, oh, if Japan did it, they can be successful. Let's take a look at the United States. The United States owes the world something around $1 to $2 trillion. The United States runs a current account deficit and a budget deficit. So it's a completely different financial situation in Japan. The United States, foreigners own a lot of the debt. The United States relies on the foreigners to buy the debt to fund itself at affordable levels. It's a completely opposite situation of Japan. So saying that Japan did it and it's okay, it can work in the United States, misses the differences fundamentally between the two situations. Now on to don't freak out and go, move all your money into gold or whatever or something and suffer some capital losses. How I structure my portfolio is to benefit from both situations. I have high nominal rates right now, right? I know on a real basis I'm losing money, but thankfully, as a percentage of my net worth, the amount of money I consume on food and energy is very low. So even if I have a 5% rate and it's still a negative real rate, on the amount of capital that I have, I'm still making more than I need to sustain myself. So keep some money in cash, put it in a money market fund. You're making 5-6%, and take whatever you can afford, a small amount, and put it in something that's going to benefit if money printing resumes. That could be NVIDIA stock. It could be Bitcoin. It could be productive farmland, whatever. You want to have a barbell. You want to make sure that in the event that the money starts getting printed, I can easily move out of my short-term, money market fund government bonds into the risky stuff with a fixed supply and zoom up that way. Or if nothing happens, I'm still earning money. I'm still earning yield over here on my treasuries or whatever, short-term government bonds. I can fund some of my expenses, and I run a positive carry trade, meaning I've structured my portfolio such that if shit really fucks up, I'm going to make so much money in that situation. But as long as it's very calm, I'm still covering day-to-day expenses. And so you want to have an optionality portfolio that costs you little to nothing, if not makes you money over time. If you're able to construct that, then again, timing doesn't matter because you're not paying for time. If you're selling a bunch of stuff and you've got everything in the risky bucket, yes, I would agree with you. Then you're like, well, when is it going to happen? It didn't happen last month and I'm down such percent, or I needed to buy, go to the hospital because I had an emergency injury and I had to sell down some of this portfolio that I'm like betting on this collapse, and that was financially ruinous, right? So it's all about trying to construct this portfolio where the cost of waiting is zero to making money versus, it's costing me money the longer this takes to happen.
Okay, so I want to go a little bit deeper into exactly how you structure your portfolio so I heard we're going to do a barbell strategy. We want to make sure that we can move one way or the other depending on what's going on as something starts to pop off. But you said risky stuff with a fixed supply. So hiding in that are what I'll call two philosophical principles. Risky stuff, I'm guessing you mean high volatility. And so explaining to people why volatility is a feature and not a bug, I think may be surprising to somebody. And then why a fixed supply?
So again, we want to basically participate in the upside to the maximum we can. Right? So we want the high volatile stuff. We want the crypto. We want the tech stocks, right? But when stuff doesn't happen, then we want our brakes. So we want, like a car, right? You want to go as fast as you can on the straightaway when you are racing, and you want the best brakes possible so that you can take those corners and not get wrecked, right? So the brakes are short-term cash instruments that are earning yield. That's paying you your grocery bill, you're filling up your car tank, whatever it is that you need to do. You want to be making sure you can cover those expenses with some cash in the bank or in a money market fund or something like that, and a higher yielding instrument, so you can pay some of those expenses so that when shit's ready to go, oh, I'm over here. I'm ready to make as much money as possible when they're printing money. I'm not in this safe, boring thing because this situation doesn't happen. There's not very many straightaways, right? I need to make as much money as I can when the making money is good, and then put the brakes back on, right? As if you were a race car driver. That's kind of how I want to think about it.
Okay, so knowing that these trades are excruciatingly difficult to pull off. So for people that don't know you, you manage your own money. You've often said you find it intellectually stimulating. It's fun. I will ask the question that better be on everybody's mind. So lifetime, are you up or down?
Up.
Okay, good. So we know at least your strategy has worked once. That's very valuable. So how do we make the volatility work for us? Because obviously the best advice, and people laugh at this, but I think they laugh at this at their own peril because they don't understand why it's become the phrase, buy low, sell high. Now it got repeated so many times that it became funny because people think it's so self-evident, but in reality, it's the thing people never do. They almost always buy high and sell low. They buy high because it's hype, it's moving, they finally pay attention, they ape in, and then it starts trending down, they panic, and they sell as it's lower than when they bought it. So let's assume that they're going to be emotionally cognizant, they're going to stay calm, they're not going to make that mistake. But how do they know which of the risky assets to do? How do they know how to do volatility well?
It's personal preference, right? Like obviously I'm in the crypto sphere. I love crypto. I understand it. The volatility doesn't scare me. For some people, they might, that's too much for me. Maybe I'm going to stick with NASDAQ tech stocks. I understand that. I understand why this particular company could do well. I'm going to jump on the AI tech move. It doesn't really matter what it is, right? But looking at whatever it is that you think is going to be your upside winner,
hold on. It not only does it matter what it is, it's the only thing that matters. Because if they bet wrong, they either make no money or, God forbid, they lose a lot of money. So
the most important thing is not the upside, it's the break. The break is I own cash in a 5.5%, 6% yielding money market fund, or wherever you are in the world, whatever that is, like the short-term government. That's the break. That's paying your bills. That's paying your rent. That's earning you a little bit of income, right? Because at the end of the day, you want this portfolio to make you money while you wait. So if your portfolio,
to turn it into a principle, you're saying basically you're going to move into high volatility something that you have some reason to believe is going to do well, but you should not be putting more into the high volatility than you can see go to absolutely zero. You should have enough in the break category that even if all of that goes to zero, that you're still going to be able to eat and fill your tank up.
Exactly, because you're going to know when to move into high vol stuff. Fed market panics, everything's getting dumped. Fed comes in overnight, says we are backstopping the financial system, and we've created some alphabet letters that essentially mean print money, right? And it could be, pick your different central bank and wherever you're from. Then okay, cash is trash. I was earning 6% overnight, now it's zero. I'm out of this. And guess what? You're not going to suffer any capital loss versus if I were in some other type of instrument. Maybe it's a liquid or whatever, right? So I can get out of this thing very easily. And boom, maybe I had some already in my high volatility bucket, but now I'm fully in that high volatility bucket because I no longer am earning anything on the cash. So why would I have anything in the other bucket? I wouldn't, because I'm getting zero. I'm getting nothing. So I have to go into that because I have to find something that's going to maintain its purchasing power when the denominator of fiat money expands infinitely. So you'll know it's not as if like the S&P went up 3 times the instant that Ben Bernanke unveiled quantitative easing in March 2009. It took many, many, many years. It's not like you have time. This isn't like, oh shit, I got to go, sell this, buy this, and I miss it by a day, and therefore goes my return for the next 10 years. No, you're going to have time. It'll be very clearly communicated. It's just, are you listening to what they're saying?
If you want to have a solid strategy in place to grow your business, you need to have a very clear and accurate picture of the business finances as your starting point. But managing finances has historically been a tedious and time-consuming task that very few entrepreneurs want to make time for or even have time for. Now, however, you can revolutionize the way you manage your business finances with QuickBooks, the #1 accounting software for small businesses. Bookkeeping with QuickBooks is easy, with one place to track expenses and inventory, organize and manage bills, send invoices, calculate tax and deductions, and compare projects for profitability. And with QuickBooks Payroll, you can streamline payday, track time, manage HR, and offer team benefits. So discover why 88% of customers say QuickBooks helps their business be more successful and save yourself time by bundling bookkeeping and payroll. Just click the link below to get 50% off 3 months of QuickBooks Payroll. Try it today. If you run a small business and your goal is to stay competitive and grow effectively in 2024, then you need to make sure you have a killer CRM, one that allows you to connect with your customers' needs like never before. HubSpot's Starter CRM Suite provides your small business with the essential tools, education, and support you need to grow efficiently. Attract new customers, automate your outreach, save time, and connect better with your customers with HubSpot, the most powerful and easy-to-use customer relationship management software. With integrated marketing, sales, and customer service tools, you have everything you need to efficiently build your business in no time. Find out why over 200,000 customers from more than 130 countries trust HubSpot to bring their team, tools, and data together all in one place. And that includes the Impact Theory team, by the way. Click the link below to try HubSpot for free today. Okay, so that makes investing sound easier than I have experienced it to be. So the way, again, saying very clearly, nobody should take investing advice from me. And I mean nobody. I am still grappling to understand this stuff. But when people do ask me, hey, Tom, with your limited understanding of investing, what do you advise that I do? My thing is always, you're going to lose if you try to trade. So don't try to trade, meaning actively, like I'm in there, oh, I got just right, and I'm trading in the morning and in the afternoon. Like you're going to lose, guaranteed. What I would tell them to do is pick the most diversified bundle of whatever. So whether that's the S&P or you said AI growth stocks, I don't know if you'd consider that high volatility, but something that where it spreads your risk that is commensurate with the amount of knowledge that you have. If you don't have a lot of knowledge in it, then I would go very broad and I would be very careful and I'd be trying to get as close to Ray Dalio's all-weather fund as humanly possible, something that's going to perform 4 or 5% no matter what happens. That's when you're ignorant, like me, that is the thing that I would push people towards. Do you agree with that when people don't know? And do you agree if you're going to get into something that's high volatility, you should only do it in an area that you understand?
I think you need to define your time span. I think a lot of people think they're like, wow, I see this person on TV or TikTok or Instagram or whatever, and they went from 0 to hero in 5 trading days and made all this money. So I should do the same thing. Like, if you're not willing to dedicate 24/7 of your life energy looking at a screen, then you should not be trading on short time frames. So what does that mean? Don't use leverage. Don't open up the options trading account or the futures trading account if you're not willing to put in the work to sit there and trade. Now, obviously, I have a large ownership in a futures exchange. I'm not saying don't use my product. I'm saying if you are going to be a day trader, then be a day trader and dedicate yourself to doing it. Don't work a day job, think you're going to come home at night for 2 hours and just trade yourself into quitting your job. Right? It's a profession. It's a dedication. You can do it, but be willing to put in the work to do it. If you're not willing to put in the work to do it, then, broad-based indices, different things, whatever you understand collectively. Okay, I want to own stocks. I don't really know what. Okay, well, my country has a particular index, right? A lot of people are going to be buying the same thing. It's a question of taking that index and combining it with the breaks. That's the point. To be able to both participate in a general rise in asset prices, but not care when it happens. And if you can construct that portfolio, then you can sit at home and not worry about it.
Not worry about it, meaning you need to have patience for when the moment is actually right. And if you've deployed capital into long-term things, you're not going to be able to take advantage of the moment when it comes.
Or if you've basically thought you're going to day trade yourself out of this and you're staring at the screen all day and you're not willing to put in the work to actually be a good day trader, then you've squandered your opportunity versus saying, okay, I don't know when the timing is going to be, but I know that I have, thankfully, to these relatively higher interest rates, I have the ability to both earn some income on my excess cash and deploy a small amount of cash into what I believe is highly volatile things, whatever that is for you. And that can allow you to sit there and patiently wait for the inevitable math to catch up with the bad politics.
Okay, so let's run through what you said is your likely scenario, that 3 to 6 months, something bad is going to happen. It's going to cause a ton of money printing. But I'm guessing in the money printing is when you're saying we're going to have this sort of jubilant moment where everybody is feeling flush. And I forget you said it's going to be some huge moment. I forget how big you were saying, but it's really going to be wonderful. And then it's all going to lead to something like the Great Depression. How do we ride that wave and that crash so that we do well in both moments? When the money printing starts, we want to go to high volatility. That's the play.
Yeah. So my sort of mental mind cap now is, I think the biggest trend so you always want to own the new tech thing in the bunting bitching bull market. So if you look over history, the new tech thing, it's been railroads, it's been radios, it's been computers, it's been the internet, right? Every single money printing cycle has a new technology that's going to fundamentally alter this modern civilization that we've had since the Industrial Revolution in the mid-19th century. And therefore, we all need to be in that because the way we exist as humans is going to fundamentally change. And yes, that's true in a longer term perspective. However, there's a mania that happens. So the mania this time around is going to be AI, right? ChatGPT has been the fastest growing technology adoption ever in human history. It went from, I don't know, 0 to 100 million users in however many days it was. It's fast as ever. So we are all in on AI, and you can look at Nvidia and some of these other, AI related stocks, and they do not give two fucks about this banking crisis, about the debt overhang, the population issues. They're going straight to the roof, right? Because everyone's like, okay, I know AI on a long term basis. Fast forward today is going to completely change what it means to be human, what the human economy is or isn't, and I want to own the next Google, Facebook, Amazon, Alibaba, ByteDance, right? I want to be in that company. And so I'm going to start trying to find anything that's related to AI and pumping money into it. So on one hand, we have the most amount of money that's ever going to be printed in human history to try to save the global Keynesian bond market of all these governments. And we have the newest technology that has the fastest adoption ever in history of a technology. We're going to combine those two. We're going to get the biggest tech boom mania that we've ever seen. And it's going to be predicated on anything related to AI and artificial intelligence. So for me personally, I have a portion of my portfolio that is predicated on AI. I actually am one of the largest shareholders in one of the largest sex doll manufacturers in the US that has robotic sex dolls. And so
I did not see that coming.
I think we actually plan on going public at some point. So that stock, that company, I think is going to do very well in this boom. On the crypto side of things, I've been making the case that artificial intelligent economic agents inherently need decentralization, and therefore they should be using Bitcoin for money. They should be using Ethereum for smart contracts and governance and DAOs, and they should be using Filecoin for decentralized storage. I own all three, whether it's mining companies in Filecoin itself, lots of Ethereum. I have my family office. We're investing in decentralized architecture technology that's going to power the growth and decentralization in the future. And obviously I have a lot of Bitcoin, right? So I'm all in on, number one, AI in the traditional sense, AI robotics, and I'm all in on the intersection of AI and crypto on the technology front, because this is the mania that is going to captivate investors to take that money and to funnel it somewhere. Because they're not going to be buying companies like General Motors. I mean, maybe it'll go up, but that's not going to be where the zeitgeist of the world is. It's what is AI? The governments are printing all this money. It's got to go somewhere. It's going to go predominantly, in my opinion, to AI listed companies, venture capital funds doing AI investment. And so it's going to be absolutely insane, because we're combining the most amount of money printed in human history with the most disruptive piece of technology to what it means to actually be human and interact in this universe. And so it's going to create fantasies of growth that will never happen in the time frame that they say it is, but we're going to believe it as a collective investment public, which is going to drive that. So that's my super volatile segment that I want to participate in. And then on sort of the boring side, I will continue to move money from the high interest earning, money market funds and stuff as rates start to come down. But I'm not going to do it beforehand. I'm going to wait for them to tell me. And usually, unfortunately, right after the Fed or any other central bank is printing money, there's usually some sort of financial crash, because the reason they're printing money is something bad happened. So it's not as if they start printing money and things just keep going up further. Things usually went down a lot. Something happened. They say, oh, shit, we need to print money. They print the money. Then things go, they retake that level, and then they go higher than that. So it's a mistake to think that just because you're investing now, yes, if you have a long enough time frame, you should make money if they print enough of it. However, it's very path dependent. So instead of trying to time the market, just wait for them to tell you about it. They're going to tell you, but why not just earn 6% in your money market fund, just chilling? So I'm not trying to time when it's going to happen. I have a mental model. I'm getting prepared. I'm making sure that we're ready to make investments and identifying the things that I think are going to do very well from a macro perspective and a thematic perspective in terms of where I think the investment public is going to focus on. But I cannot predict the timing, and nor do I want to lose money because I try to be too cute and predict when, something's going to happen and where exactly it's going to happen in the financial system.
And so when you say that they're going to tell you, meaning we're going to print money, we're raising rates, we're lowering rates, whatever the case may be.
Yeah, they're gonna come out and say, oh, because something happened in the financial system, we have now lowered rates to this, we've introduced that program, whatever it is, right? It's very transparent, regardless of whether it's the Federal Reserve, it's the PBOC, it's the European Central Bank, it's the Bank of Japan, Bank of England. They're going to tell you exactly what it is. Because what do they want you to do? The market's already fallen. They want you, the investing public, to gain confidence to go and buy stuff. So they need to be very clear about what they're doing. And the question is whether or not you believe them, or you're just going to say, no, I'm just going to stay in this very, very safe thing. It's fine. But on a real basis, you're probably not going to make the money you would like to make before we get, Judgment Day, when things go down a lot.
Mm. Okay, so if we know that the market prices in the things that it already knows, you have to be betting against the consensus and being right. So what would a well-intentioned person who disagrees with you say to what you're saying right now? Because if it really was that easy, everybody watching this video would just do that and they'd make out like bandits. But of course, it won't play out like that.
The consensus says that we're going to have a soft landing, that these few men, mostly men, very few women, have somehow divined the business cycle and thus can print just enough money and raise rates just enough. And the inflation rate of the world is going to come down just to the level of 2%. And the employment's going to stay the same. And we're just going to go along and be nice and happy, right? That's the consensus, that these guys know exactly what they're doing and they got it. So which means you don't need to sell your stocks. You don't need to sell your bonds. You just sit tight and keep adding more, because there's not going to be any financial disturbance, because they have it right. And inflation is going to trend down right to their level, exactly at 2%. And it's going to be amazing. That's the consensus. So if you don't believe that, then you believe something on either extreme is going to happen. Either rate's going to go up really, really high, or some financial disturbance is going to happen because they keep raising rates and force them to go right back down to zero. And so my thesis is that when you have 360% global debt to GDP, you no longer have situations where things happen in a calm fashion. You go to the extremes very quickly. And so to think that all of a sudden, less than 100 people are able to determine how this global economy is going to somehow soft land after printing the most money that we've ever printed in human history and gone from 5,000-year low of interest rates rising the fastest pace ever in financial markets, then that's a bet that I'm not willing to take.
Do you know Chamath Palihapitiya?
Yes, I know Chamath.
Okay, I could be misquoting, but I'm almost certain this is correct, that he was saying that, people make such a big deal out of this 130% debt to GDP, but it's a big nothing burger. It doesn't really matter. There's no law of physics that says that we can't go over it. So even though historically that's been a sign that has led to collapse, given the modern economic theory, and this is how I remember it. Oh God, forgive me, Chamath, if I'm way off. But that was my takeaway. So other than it's very compelling to me that we have all the historical examples that say every time that we do this, it leads to collapse. But if you were to take his stance for a second, can you see how maybe it is possible that we get the soft landing, that they do get it right, that isn't some magic, thing like the speed of light? It can be crossed and people can still come back from it. And I think you would say that, well, I'm going to listen to what they say anyway. I'm not going to make a move until I actually see it happening. Could he be right?
So I would say investing is a game of probabilities and expected values. So if Chamath is saying, okay, there's been umpteen other examples where this has not been the case, but this is going to be the one example where the markets just keep grinding a bit higher. Okay, then you're taking this time is different mentality. And every single time there's been this time is different, whatever aspect of the financial markets, right? The problem is you're not getting paid enough for this time is different. This time is different means S&P goes up, 4 or 5%, right? I'm making 6% sitting my money in cash. So why bet on this time is different if I can earn the majority of the excess return of stocks by literally just putting my money in a money market fund and I have no risk? The Federal Reserve is going to pay me that money. Why take the risk? This time is different, because usually it's not different. It's the same as every other time. But so I'm not getting paid enough to be this time is different. That the only way to get paid enough is to add more leverage, which increases your risk. I'd rather take, okay, well, everyone believes this time is different, therefore I'm not getting paid enough for it. But the other alternative, which is it's the same as it's always been, but I get paid a lot more money to be in that camp. Well, I don't want to go there. And on an expected value basis, I'm going to make more money over time. Why not? If you believe in Chamath, just put your money in a money market fund. Don't buy any stocks. Why would, like, the S&P, apart from, Nvidia and Facebook and Google and those 7 big stocks, has not beaten return on cash. So either put your money in cash and go in AI stocks and believe this time is different, or just put your money in a money market fund. There's just no point to take the risk on the general market for this time is different, because it's never different. It's always been, this time is different, gets clobbered.
Other than the AI high volatility stuff, do you have anything deployed in the stock market right now?
Uranium. So I believe that we're finally going to get our shit together and somehow believe in nuclear. And there's been vast underinvestment in uranium refining capacity. And as the world moves to nuclear, and maybe the West decides that they want to be dumb and not do it, fine. But China's going nuclear, India's going nuclear, Saudi Arabia is going nuclear, the rest of the world's going nuclear. And there's just not enough refined yellow cake to go around. So, uranium mining companies in certain jurisdictions are going to do very well. And I'm in a large, not large, my largest equity position is Cameco Mining, CCJ. It's up, 80% this year. So that's something that I believe in as a longer term energy play.
Okay, so understanding now then the way that you're deployed, I want to talk about euphoria. So I never experienced what euphoria at the humanity level looked like until the 2021 crypto rush. It was really fascinating to watch. It was great, and it felt a certain way. So I certainly know now what to look out for in the ether. How do you think about, as a disciplined investor, how do you think about euphoria? I know you're planning it into the AI, like, hey, I know people are going to get their stimulus checks or, the bailout, however we want to categorize it. They're going to put it into whatever is the hype thing of the moment. You're expecting that to be AI. How do you know? Because I'm assuming you're going to get in, probably not try to time the top perfectly, but you're going to get in. You're going to get some level of gain, and then you're going to come back out. I would assume, if we're talking about euphoria, because euphoria is, I would say, quite irrational. And we know when that clicks over, I would now be fearful when others are greedy and greedy when others are fearful. My now honed instinct for that would kick in.
So I think euphoria, in my perspective, is the willingness to invest in illiquid things that have a beautiful long-term future. So the problem with AI is that to get liquidity in my cycle time, which is the 2026 timeframe, you need to have been investing 3, 4, 5 years ago, right? Because it takes, if you're talking about equities, it takes 5 to 7 years to go IPO for a company. So if you're putting money into a Series A startup today, you're not going to see any liquidity until 2030, timeframe, well after the bull market. Even though on paper your thing might be up, you can't actually sell it because it's not liquid. Now, obviously, I do a lot of cryptographic token investing and stuff. Again, if I'm signing a term sheet today, due to lockups and whatnot, I'm not getting my tokens until maybe 2026, 2027, which might be a little bit too late for me on the cycle time perspective. So to the extent that I can, I want to participate in my theme, which is AI and crypto, in a way where I have liquidity by 2025 and 2026. So that when I get the feeling, and you're going to see something, I don't know what that something is, whether it's just something that looks mispriced, like, I don't know, FTX has Tom Brady in a basketball stadium, right? It's, this exchange that never existed 2 years ago now has their logo on top of in Miami, and Tom Brady is one, some would say the biggest American football player ever, is now stumping for them on TV. That looks about strange, right? There's going to be something that looks a bit strange. It's going to tickle your mind. You're like, that doesn't make any sense. Maybe we've gone too far. When you get that sense, you want to be able to go to your portfolio and liquidate things. Now, the euphoria is that I believe that AI is going to be such a transformative thing that I'm willing to give somebody some money and not see it for a very, very long time and not be able to liquidate it at all. And therefore, you're going to get caught off sides when the market all of a sudden goes, okay, well, show me the growth. Show me how you're going to generate enough earnings to pay me back 100 times earnings, NVIDIA. Show me all the people willing to pay real money for these AI solutions. Show me how your startup has any defensibility against OpenAI or Bard or any of these other large initiatives that could essentially just disintermediate your little plugin on top of their large language models. Show me the money. When the market starts saying that and you can't liquidate, you're wrecked. Because then the market's going to start asking the question of where's the revenue, where are the users, or where are the users that are actually willing to pay real money for the product. And that's usually the end of that particular bull market. And things just start falling to bed because there's just no liquidity and people can sell what they can. And the game is up. Now, obviously, out of the wreckage comes your Amazon that was down 90 something percent from high in 2000 to 2002 or whatever it was, and then rockets up multiples of what it was worth. But the majority of us are not going to be able to find the Amazons. We're going to be finding the pets.com. That's the game. So it's trying to invest in the theme and the liquid vehicles available and not getting caught up in the hype and putting your money into illiquid things that you can't sell when the mood turns.
We are at the culmination of the post World War II period. We've had 4 generations since then. So all the people who fought in the war are pretty much dead. So we've lost that knowledge, that reticence to ever do something stupid and terrible like a total world war ever again. Now we have people around the world who are celebrating these leaders who are bombing indiscriminate civilians because it solves their particular issue, whatever that is, because we don't have this institutional knowledge that everyone else is dead who would participate in World War II. So, and we also have a situation where the United States did very well out of World War II and created a whole global system that to preserve their hegemony, and now that's coming undone. And when top dog is getting challenged by the dogs at the bottom, there's always conflict. And so we're at that point in time. We have no institutional memory of how bad war is, and we have a preeminent power that's being challenged by others who was going to resort to violence to preserve their position. I think we are at this situation that has happened in the past. Many times empires have come and gone, but now we have, for the first time in human history, an ability to save in a currency, Bitcoin and the cryptocurrency situation in general, that is globally owned by everyone. And so the people own a new type of money. It's people around the world can still sell their fiat, whatever, and buy Bitcoin. It's not blocked or banned in most places yet. And so you're able to move wealth between this analog system that we've had for thousands of years and to a new way of socially creating financial wealth, a financial system, a new type of money. This sort of situation is never going to happen again because we have all these fiat assets that are being depreciated and everyone knows it's happening. And now we have this little small door called Bitcoin, and people are starting to go through the small door. And that's why the Bitcoin price is up, I don't know, 50% or 60% this year already, as now we have the institutional investors saying, yeah, I understand this game is rigged. I helped rig the game. Now I have a product where I can get out of this mess that I created, get me the fuck out of government bonds. I want some of this Bitcoin too. So now everyone's competing to get in this little door, and that's why the price is going up. So this is a once in a lifetime opportunity. We have a system reset, and we have a way to preserve wealth in the old system and bring it into the new system. And that's what crypto is.
All right, that's powerful. So if we think of crypto as the ark that we can all get on before the rain comes, the catch is that you've got all kinds of different cryptocurrencies, all kinds of different theses about which one we should be getting into. What's your take? How do you break down the world of crypto?
So Bitcoin is the reserve currency, if you will, of crypto. It's the ultrasound money. It's crypto money. And it's proven that's what it cares about. The community of Bitcoin cares about security. and the immutability of the Bitcoin blockchain, and it wants to make it the soundest crypto money. So if you're thinking about, okay, I don't know anything else about crypto, but I kind of believe in this whole inflation and changing global relations story, then just buy Bitcoin, right? It's got the largest market cap. It's very conservative with the types of things that are added to the network, because everyone wants to make sure that Bitcoin is always the hardest money. So the experimentation is much lower on Bitcoin than other networks. Next, you go to, well, okay, can we build a new financial system within crypto that's decentralized finance, DeFi? And Ethereum, in my worldview, is the best decentralized computer that has been built thus far. And so, if you think, okay, I think we need a new financial system that's based on these crypto assets, that's decentralized, that's transparent, blah blah blah, then Ethereum is where it's at. Then once you get past those two things, I'd say most other things within crypto are either some sort of application that rides on top of Ethereum or a decentralized like computer, another blockchain trying to disrupt either being the best money or the best decentralized computer. And then you sort of have to get into the weeds on understanding what it is these protocols are trying to do. So for those who just want to like close their eyes and buy something that's crypto safe, I'm not saying that's, there's no risk here. I would say Bitcoin and Ethereum are where you should start your journey. And once you say, okay, maybe there's some things I think these protocols could do better, or I've been hearing some things about these exciting new, very smart people building something, then you start going down the rabbit hole of other coins that do other things and obviously have more risk because they're experimenting more.
What do you advise people around volatility? I think one of the things that draws people to crypto specifically is the volatility. I'm actually very curious to see what happens to cultural energy around crypto once it's the tried and true thing.
Volatility is your friend. The reason why you're even thinking about crypto is because the price went up a lot and you heard about it. So you want volatility. The entire TradFi traditional government apparatus is trying to do something unnatural, which is remove volatility from the system. Entropy is always increasing. It is unnatural to try to suppress volatility. Think about it like your lawn, if you have one at your house, right? Entropy says the grass keeps growing because that's what the grass does. What do you try to do? You spend energy to cut the grass because you want it to look a certain way, a certain non-volatile, pleasant way. But it's unnatural. If you don't have the energy to cut the grass grows. And the grass will grow long after you're gone because you can only do this so long. And that's the same thing governments and central banks and banking systems are doing. They're trying to squash volatility. We don't want volatility. And they're trying to convince you that it's safe, but there is no such thing as safe. There's chaos in the universe. It's always increasing. They're doing the unnatural thing by trying to remove it. And then at certain points, they can't do it anymore. And then there's an explosion somewhere, whether it's a war, whether it's a financial crisis. So embrace the volatility. This is the nature of the universe. And that's why Bitcoin and crypto is a good thing, because there is none of this manipulation. It goes up, it goes down, but it's a true reflection of what the universe is. So I think volatility is a good thing. Obviously, that means if you use leverage, be very judicious about it. If leverage trading is your thing, that better be your full-time job. Like you better eat, breathe, and sleep the thing that you're trading, because that's the only way that you're going to survive. Thinking that you're going to get home from work, put on some highly leveraged crypto trade, and just trade for a few hours and then go to sleep, you will lose all your money.
Okay, volatility as a good thing. Do you think that crypto will lose some of its potency, its cultural energy when the volatility begins dying down? Or will, like in a given cycle, the way that this traditionally goes is you've got Bitcoin, which has massive volatility, but is less volatile than some of the what people lovingly call shit coins. So people tend to go down the curve. So they'll start with Bitcoin, they'll ride that up. As that begins to stabilize and chop sideways, then they're going to go to the next volatile. If that crashes or whatever, they go to the next, to the next, to the next, constantly chasing volatility. Will that forever be? People will just keep introducing new and highly volatile things? Or will it become more like gold, where it's a far more stable entity?
Well, Bitcoin has law of large numbers. The larger it gets, the less volatile it become. And as you mentioned, right, for people who are saying, I want to make big gains in a short period of time, Bitcoin might not do it for them. They say, well, I need the next new thing. And so they start trading whatever the new shiny bauble is that's being sold out there in crypto land. There's nothing wrong with that. You just recognize what you're trying to do. If you're saying, I want to save in a ultrasound money, then yes, the volatility is not a good or bad thing for Bitcoin. It will go down over time as the asset class gets bigger. If you're saying, I need the volatility, I'm a professional trader, this is what I'm here for, then there will always be a new thing to trade, because the great thing about crypto is it's the only free market left where humans are expressing themselves on whatever it is we think is valuable. There's no manipulating force with an unlimited bag of fiat currency that's telling us what is a good and a bad investment. And so there will always be volatile things within the crypto ecosystem, so long as there's human beings trading it. And then, I guess we'll have machines too soon, these AI operators in the ecosystem.
It's really interesting. So I want to get to the essence of what crypto is. I want to get to the essence of what markets are, why people play them. So I really want to be the contribution that I make to, I mean, anything that I do, quite frankly, is helping people get to the essence of it, to think from first principles, to build a thesis, even though ultimately I think that only the simple spreads. I do want people to be able to understand the nature of this. Do you see markets as gambling? Like, are they gambling at their very nature?
I'd move it even more fundamental. We are gamblers, everyone, all the time, constantly, because we don't know what the future holds. So let's take an example, and I wrote this in a previous essay. So imagine there's a building, you walk into the building, you can either take the stairs or take an elevator. So taking the stairs, using your own feet, walking up is safer than the mechanical thing, which is an elevator. But walking up the stairs takes more energy than riding up the elevator. So what do? Well, your brain, whether you're conscious of it or not, is constantly evaluating the probability that if I do one of these things, will there be harm that comes to me? And is the probability of that harm outweighed by the gain, whether it's time or energy, by using one or the other modes of transportation? And so you're gambling. You don't know do you know if this elevator is going to break down and fall 30 flights in an instant? No, but you believe that there has been a credible engineer that's designed this piece of technology, that there's a government building codes that govern how it's been installed and how it's been maintained. So the risk of me taking this elevator, even though I don't know if it's going to fail when I get on it, is very, very low. Therefore, I will take the elevator because it's faster and less energy spent than walking up the stairs to the top of the building. Right. So we gamble all day, every day, because the future is unknown. So for people to say that, oh, markets are bad because it's gambling, no, your whole life is a gamble. You do not know what's going to happen one moment to the next. You are constantly assigning a probability to the future. And that's what the market is. The market is for a particular thing. What does the crowd say the probability of the future of this company building this product, making this money, or this asset being worth whatever it's worth in the future? What does the crowd think? That's what the market is telling us. And the market gives us great signals as to what the crowd actually thinks, because we're putting our money on the line. And what is money? Money is just energy and our time in an abstracted form. That's why money is the most important thing in any society, because if you degrade the value of money, you degrade someone's time and their effort and their energy. And it's an affront to human dignity if you degrade the value of the money that they earn by doing work to, earn a living, pay for food, blah, blah, blah. Right. So markets are gambling, but your entire existence is a gamble as well. So I don't think there's a problem with that.
Oof. Okay, this is really interesting, and it goes back to what I was talking about with the ability to save. From where I'm sitting, feels like it should be a human right. Okay, let me just go back and recap what you said. Money is energy and time in an abstracted form. So you go to work, and you do a thing that the world says that they value, which is why somebody's willing to pay you for that, because they're able to create a thing that they sell to somebody. So you spend energy and time creating a thing that people want to buy. Now, what that allows you to do is proof of work. So you have this unit of money that you've exchanged for your labor. Now, when you are putting that into a system where they can socialize losses, so it drives me crazy how complicated this all is. But let me just walk everybody through. What ends up happening in the current Keynesian economic model that we have, which I'll give a brief summation of Keynesian economics. If you see that I've gone wrong in any way, please jump in. Keynesian economics is basically, hey, the market left to its natural devices is going to swing wildly. There are going to be massive upsides. There are going to be massive downsides. And if you get to one of the moments where the economy is not able to progress forward, part of the reason it may not be progressing forward, and this is the break from the classical model, is that people are just poor. And so if you stimulate money into the system, now you can get the economy moving again. And so you flatten the curves both on the upside and the downside. So you're squeezing the volatility by going back to your mowing the lawn analogy. You're injecting energy into the system. The government is putting this new money, which they're making up out of thin air, into the system in order to get people feeling like they have money again. It is very much a man-made manipulation of the system, but this is essentially what we've been doing since the Great Depression. So Keynes comes up with this idea in the Great Depression, and he realizes, hey, wait a second, there are people willing to work, there are factories here that are not at capacity, there are even people willing to buy, and if they just had money, then the economy would start moving again. So, hey, make up money. Okay, sounds amazing until you put it together with what you just said and the fact that this is socializing losses. So, all right, something bad happens. 1929, we have an economic collapse. People got into a bubble. We just got into a bad situation for a whole host of reasons I won't go into right now. But anyway, bad thing happens. The government then says, oh, I'm going to print more money, which is now taking that loss and spreading it across everybody. That's what happens when you're printing money, because there's no new goods put into the system that anybody wants. There's no new labor that has gone into the system. There's only the artifact, what should be the artifact of somebody's time and energy. But it's not, it's just made up. And so that ends up diluting across everybody. So you have individual losses that are spread across everybody to the benefit of only people that hold assets. So now you get this massive bifurcation. So I'm very worried about the hollowing of the middle class. And going back to what exactly creates this, as far as I can tell, is this. It is this moment right here where you are socializing losses across everybody. So the poor, the middle class, and the wealthy are all going to have their buying power reduced, but only people that have assets are going to get wealthier. And so what's crazy is if you look at the moment that we're living in right now, you have a growth in the upper class. So if you break lower, middle, upper, you have growth in the upper and you have growth in the lower. And only the middle class is going down. Now, at first I was like, well, that's kind of exciting. You actually have more people going into the upper class than you have going into lower class. Amazing, right? But as you hollow that out, you get just literal division and warfare within a country. All of that makes sense based on what you just said, which is that money is your time and energy in an abstract form, and it is an affront to human dignity when you begin messing with that system.
Yes.
Now, laying all that out, this is why I am really unnerved by the moment that we're living in now. And I'll try to tie this all back to crypto as the potential arc that we're all going to get on as the rain continues to fall. But just today, one of my employees came up to me and was like, I'm finally seeing the data that backs up what I feel, which is I just cannot get She didn't say American dream, but that was the punchline. I can't afford to buy a house. I see other people making huge amounts of money and I'm not. I'm not able to get ahead. And on paper, it seems like I'm making enough money, but I just don't feel like I'm getting anywhere. And so she isn't positive about the moment that she's in, nor is she optimistic about the future, because there are these cues that people look to: buying nice things, having a nice car, having a nice house, feeling like you can afford children, feeling like when you retire, it's going to be travel and fancy restaurants, and it isn't going to be me working until I'm 85 and, super unhappy. And so when you take that, you take the anger, you take the frustration, you take the GameStop of it all. Again, people YOLOing in, people, I don't want to say following sort of culty ideas, but like an idea will gain momentum and they just get on board with that momentum, versus doing what you said: get your spending under control, figure out your risk appetite, deploy that into an asset class that you believe matches your risk appetite and is going to go somewhere. Okay, so there's been a demoralization of people. They don't understand what it is, but it's, not to be too harsh, but it's Keynesian economics. It's the manipulation of the currency. It's the massive inflation to deal with debt. Okay, if all of that is true, then it certainly explains this great migration from TradFi over into crypto. Does all of that feel right? Or do you feel like I'm being unfair to the current economic situation, to Keynesian economics? Maybe I don't understand it.
I mean, the only wrinkle that I would say is that if the government is able to borrow money and build things of real economic value, like, okay, in the 1950s, Eisenhower did in the United States, US President Eisenhower did the Highway Act, right? And the US built however many millions of kilometers of roads, which lowered the cost of transportation, had all this, you basically had the explosion of mass market stuff because you could ship things from coast to coast, blah, blah, blah. In China, you had building of hydroelectric dams. Okay, there was some environmental costs, but it brought electricity to the countryside. And so these are only projects that governments can do because they have the ability to tax and spend on a aggregate level. So I'd say the only caveat is if you're able as a government to build these types of things that have a rate of return greater than the implicit debt cost that you're hoisting on the economy, then those are good things to do. The problem is that there's a finite amount of projects like that. The society that you're building these things in can only accept so much of this infrastructure spending. The problem is that governments don't know when to stop. They don't know. They think everything's going to be like the Highway Act in the 1950s in the United States, or building Three Gorges Dam in China, versus where it is today, which is they're building a lot of stuff that has no value because it'll never earn back its return.
What are we building today?
Well, I mean, I'm saying we as a global society. I don't know what politicians in the U.S. are building, or China, or anywhere. I'm just making sort of a blanket statement of people. I don't know. Isn't Biden doing, what's it, the Inflation Reduction Act, or some sort of act that they're building stuff and all these government subsidies to build things, whether it's electrification of the grid or whatever, right? There's industrial policies for governments around the world saying we need to build whatever it is we think is valuable as a government. Sometimes that's rooted in market signals. Other time it's just, hey, I want to give a backhander to my boy in my district. That's the problem. There is good that can be done doing that, but politicians abuse it. And we're at the abusive stage of, the initial gains of building some of these pieces of public infrastructure. Now we're just doing stupid shit.
Ray Dalio talks a lot about debt cycles and the inevitability of how this just loops over and over. Is all of this inevitable? And do you think that the migration to cryptocurrency will be complete and we'll never be back in a system like this again? Or do you think these systems will coexist?
So it's definitely not inevitable. The great example is what's happened down in Argentina. So the policy of Argentina is, if you've never been, it's a beautiful country. I fucking love it down there. I've been skiing there, and to the falls and all kind of stuff. It's got a massive coastline. It's got arable land, great food, great wine, space for people to live, and yet it's mired in poverty and inflation because of political choices of Keynesian taken to, another level, the Peronist sort of political culture down there. And the people, after, I don't know, 50 or 60 years of this shit, are finally fed up. Let's try something different. And you have President Milei down there who basically campaigned on a promise of, I'm going to cut down government services, close a bunch of ministries. We're going to balance the budget. And he's already balanced the budget, I think, within the first quarter or two of him being there. And so we'll see how the economy reacts. So the people do have an option. They can reject what the elites are telling them. Oh, there's only one way to do this, which is print money and do Keynesian economics. No, there's another way, which is you earn them, you propose taxes. We, the people, agree to pay these taxes, and you, the government, do what we told you to do: build roads, build schools, healthcare, police force, blah blah blah, and don't do anything else. And this other bullshit that the government has tacked on to their responsibilities, and created all these deficits. So there is another option, but it requires people to understand, where's the situation. There isn't just one way to do things. There's another way to do things. There's a way to run the government like you run your household. You make $100 a month. You're only able to spend $100. That's it.
No, nobody runs our household like that, though. There's something about the culture that we're in right now, because if you look at debt, the government operates on a debt. Businesses are all in debt. Individuals are all in debt. We were at 0% interest rates for so long. Money seemed free. People just took on debt. And so it really requires a cultural shift more than anything. And I worry that what we're seeing in Argentina is that, oh yeah, there is a point at which it is so brutally painful that people would rather austerity than continuing to suffer the way they've been suffering. But are we anywhere near that point? Or maybe a better question, can we make the change without needing that amount of suffering?
No, because the loss is there. The debt has been taken. There's been unproductive activity. And this is the global thing, right? Global debt to GDP is, I think, 360% per the World Bank or something like that. And it's been accelerating over the past 2 decades, right? So there is an implicit deadweight loss in the system. The question is, who bears the loss? Now, that's what every government is tackling. What does every government do? They push that loss down onto the people themselves via an inflation tax. But the loss has to be paid. It's not like the Argentinian situation is without losses. People are going to lose money in austerity, right? The question is, who loses the money? So if it's, I don't like austerity because deflation destroys the banking system, well, in a capitalist society, what happens when a bank goes bankrupt? The unsecured creditors take over the bank. So put the fucking CEOs of Citibank and JP Morgan and Goldman Sachs and Morgan Stanley on the fucking street after 2008 and give the bank to the depositors. That's how bankruptcy law should work. It didn't work in that situation. They would rather save the managers of the banks than allow the people who are unsecured creditors of the bank take it over and run it how they think it should be run. So I think we being a lot of capitalistic systems, and even in China, they have these sorts of bankruptcy sort of laws. It's just that nobody wants to use them because it's going to disenfranchise the elites. We have all the tools available to us. We've thought about these things. We're just unwilling to use them because of who bears the pain. So that's the situation. But I think when more people realize the reason why crypto exists, crypto is valuable because we're unwilling to take these losses. If all of a sudden the United States and China and Europe and Japan said, we're going to run balanced budgets, we're going to cut out 75% of all these government services, I would be thinking hard about whether I want to be long crypto at that point. And maybe I should be doing something else because the societal mindset has changed to something more responsible. And maybe we're not going to see these massive price gains in crypto because the fiat debasement part of the equation has ceased.
Okay, so if that's a scenario that would cause you to rethink crypto, if all of those governments were, hey, we're going to be like Argentina, we're going to get our stuff together, we're going to run a balanced budget, how would you respond to that in terms of your investment strategy?
There's obviously going to be some a lot of short-term pain. And then you have to see, what is Bitcoin or crypto worth?
Really fast, will you explain why will there be short-term pain? What happens in austerity when we're not printing? Like right now, the US government is so in debt that surely if they were to just balance the budget immediately without printing any more money, that holders of government treasuries, bonds, poof, they would be gone.
Yeah. Who owns the bonds? Rich people and banks. So that's who suffers. If who's making all these, the U.S. Treasury spends about $1 trillion on an annualized basis in interest payments. Who is getting these interest payments? All the motherfuckers I saw at the ski resort, who now get 5.5% on their cash. And great, I own these Treasury bonds, I'm getting 5.5%. I've got a good capital base. I'm going to go enjoy the world, right? It's all the rich people who own these financial assets. They're now worth a lot less in a deflationary environment. The primary one being government bonds, who now the government's, going to balance the budget. And guess what? All that debt, we're just going to gone. I mean, you can do it. Debt jubilee. It's happened in the past. Study the Roman Empire and, Greek Solon and certain people. Like, it's a feature of the society where a leader comes and says, this is not a good idea for the rich to be rentiers on the entire productive capacity of society. Let's destroy that asset that they have and re-equalize system. We forget that this happens, but it has happened in the past. And so if we did something akin to a debt jubilee, who loses? Rich people. And then at some point, if the government does float another bond with a more balanced budget, then, that might be a good investment at a very high rate of return. Is that better than owning something that has made its gains in fiat terms? I'm not saying that the Bitcoin network is not valuable. I separate Bitcoin into technology plus liquidity. But if you remove the liquidity piece, what's the technology worth? I don't know. It's worth a lot for sure. But removing that liquidity piece from the equation for crypto probably means that it corrects quite substantially. And you'd want to own other types of assets now that we have, society has decided that we're going to run our public affairs in a different manner.
All right, really fast. When you say liquidity, are you talking trading volume, just the amount of back and forth?
Credit money, credit fiat money.
Sorry, you said Bitcoin is the technology plus liquidity. So you mean if nobody is manipulating fiat and printing, then you take a fundamentally different calculation on the value of Bitcoin.
Correct.
Interesting. Liquidity is one of those words that I've long been like, okay, I think I know what people mean by this, but clearly not. So when you say liquidity, you mean printing.
Yes. I mean, how much credit money has been created by the government and the banking system? And obviously, the more fiat that's around, scarce assets, finite assets like Bitcoin go up in fiat terms. But that's just a denominator issue. It's not anything. The value of Bitcoin itself as a network of peer-to-peer decentralized electronic money, again, that has a value. What is that value? I think it's very valuable. Is it, I don't know, what's the Bitcoin market now, like 2 trillion or whatever it is? Is it that? So if we removed all the money printing, we said, the US dollar, the yen, the yuan, the euro is now sort of very stable currencies, not going to go up or down much in terms of their supply. Do I want to own crypto anymore? Maybe not at this price. Maybe there's something else I'd rather own. Maybe I want to own a power plant in a new productive country where the people feel happy and engaged and want to do productive things. Maybe I want to own something different. So that's just the mental, construct that I'm operating under, because the system will change. As you said, there is this anger. We have global conflicts sprouting up around the world. We are not going to be in this Keynesian system in the next 40 or 50 years. There will be a different system. I don't know what it is. It could be that the people all wake up and they say, this is not for me. We're going to create a more equitable system, or they create something even more fucked up than the one we're in today. I don't know, but we're just going to change.
Okay, a couple questions. One, did Argentina default on their debts?
They have defaulted multiple times on their peso, dollar. Like, you could probably write a whole university thesis on the history of Argentinian monetary policy.
I mean, specifically since Milei took office, is that part of his strategy? Like, hey, debt jubilee.
I'm not sure.
Okay. I'd be very curious to know that. Okay, one possible way for this to end is you have an Argentinian solution. The country wakes up, they realize, hey, I'm not willing to suffer like this anymore. It's a bunch of rich assholes that are controlling the place. We have all these programs to take care of people, but we don't actually have the money. And so we've inflated our currency into meaninglessness. This is dumb. So let's elect somebody. Let's take our lumps, austerity measures. The system's not really working anyway. So I imagine to some extent that probably even the wealthy feel like they're on such unstable ground. They've probably long ago fled to dollars or something like that anyway, if they have the wherewithal to do it. We elect this guy. He comes in literally with a chainsaw. For people that haven't seen the footage, it is hilarious. And he just cuts, removing entire portions of the government, entire departments. Okay, so that's one way to do it. The other way to do it is war. Why does the debt, inflation through money printing, why does that lead to this changing dynamic between countries? I can't mentally track. I get it. I've seen it. I know the data, but I don't understand why that happens.
So when you're printing money, you're inducing economic activity that's unnatural. So you're producing stuff that you can't sell. So what are most wars about? It's, I have all this excess production. I have people that need to work because that's how I stay in power, because they have a job and money and whatever. They're producing all this stuff. I need someone to sell it to. So if you want to think back to sort of World War I, World War II, you had the major colonial powers each had their own home market. US has, Central and South America. Britain had the Commonwealth. French had the West Indies and sort of parts of Africa. And Germany was like, hey, I'm a white imperial power. I deserve some colonies too. Rather than going into Africa, my colony should be Russia. We read what Hitler wrote. He's writing about taking the Russian land and creating space for the Russian people, for the German people. That's why he did the dumb thing of attacking Russia during the winter. Didn't learn his lesson from Napoleon. The Japanese wanted their colony. They thought they were a powerful colonizer as well. And China, specifically Manchuria, would be their sphere of colonial projection, and their market would be Southeast Asia. And as the Western allied powers challenged that assertion that Germany and Japan could have these colonial spheres of trading influence because they also had overproduction as well. Remember, coming out of the Great Depression, what was the problem? Too much production, nowhere to put it, deflation of assets. Everybody produced too much shit. They needed to sell it somewhere. So that was a genesis of all these of the world wars. Now, what do we have today? China has exhausted its ability to build roads, pump a property bubble. Now they're saying we need to manufacture more stuff. Well, so does America. They need to manufacture more stuff. So does Europe. They need to manufacture more stuff. Why is Europe all pissed off at China right now? Because China's the largest auto exporter in the world, surpassing Germany and Japan. And they're like, oh, fuck. There goes the one industry where we were kicking ass, which was high-end luxury cars and your German and French vehicles. China's beating us at this like hand over foot. So everybody's producing stuff because they're just printing money. Say, go to work, make stuff. And then it's like, okay, where do we sell it? Oh, we need to sell our goods in China. China needs to sell their goods in America. Well, nobody wants to open up their turf to others because they need to sell stuff, not to buy others. And so that's why when you print this money and you have all this uneconomic activity happening, the drive to sell your goods in other markets is what prepares the road to war. Oh, you're not going to let me sell this particular type of product in this country? Well, fuck you, we're going to war. And I'm going to make sure that you can't sell your stuff into my turf. And that is what we're gearing up towards as all the major economic blocks are like, okay, we need to keep people in their jobs. So we're going to print the money, they're going to make stuff. And now where do we sell it?
Over the last 40 to 50 years, the financial ecosystem has been predicated on a scenario where there's never been a situation where long end, so let's call it 10 or 30 year bond yields in the US, rise, so they go up, but they go up faster than in short-term yields. It's called...
That's never happened?
For a sustained period of time? No, over the last 40, 50 years. It's called a bear steepener, right? So if I'm a bank, I'm an insurance company, I'm a pension company, and I'm going to model what I think the future is going to look like, I'm going to model the way the future's looked for the past 30, 40 years, which is every time there's an issue and yields go up, the government comes in and prints money and squashes the bet down. They squash the volatility down in the markets because they want to save the banking system. They don't want anything to blow up. But now, because we're in the situation, at least in the U.S. Treasury market, where the U.S. government is issuing the most amount of debt ever, right? Federal deficit's like 7 or 8% of GDP. It's as if we're in a war. This is, the longest sustained sort of deficit since World War II. But we're not in a war, at least not an overt one. You have 7.75 trillion US dollars worth of debt must be rolled over by 2026. Massive amount of debt. That's just on the US side. So who's going to buy it, right? The traditional buyers were, one, China, Japan, right? China and Japan are not buying any more US treasuries. China, because it doesn't want to become more tethered to the dollar from a geopolitical safety issue. Japan, because it's also facing an issue in their bond market where their currency is getting trashed because they are also trying to save their bond market. Japan, thankfully to themselves, have saved a lot of money over the last 30, 40 years. And so they're now starting to draw down on that money. They're not buying new treasuries. They're starting to sell treasuries. China's starting to not buy any more treasuries. They're starting to sell treasuries. And you can look at the official data from the US Treasury and you can see the balance of treasuries owned by China and Japan are declining. On the oil exporter side, right, talking about OPEC, Russia is a big member of OPEC. Russia's obviously not buying any more treasuries. They just banned them from the Western financial system. Saudi Arabia is not increasing its treasury position. It's also decreasing. So the oil exporting nations who previously would earn dollars internationally and park those dollars in the US banking system and buy treasuries, they're no longer buying treasuries. The US banking system. The US banking system is functionally insolvent because the regulators made the rules in such a way that it was profitable from an accounting perspective, not an economic perspective, to essentially take in deposits and buy low-yielding treasuries. And they could do it with almost infinite leverage and a few basis points difference in the change in the price, and everybody make a lot of money and everybody gets a big bonus, right? So the banks collectively bought all these treasuries in 2021. And obviously the prices went down a lot since then. And that's why we have the regional banking crisis. So at a structural level, the US banking system cannot buy more debt because it can't afford to because it's functionally insolvent. And so, that leaves the Federal Reserve. But the Federal Reserve has committed to doing quantitative tightening, which means it's letting the treasuries roll off of its balance sheet. It's not accumulating more treasuries. So the Treasury has to issue all this new debt. It has to roll over all this new debt. But the major buyers of this stuff, for all their own disparate reasons, cannot purchase it. And so what we're seeing in the markets is relationships that held clad are breaking down. If you take a look at the 10-year U.S. Treasury versus gold, you would think as yields are rising in the U.S. Treasury market, that gold would be getting clobbered. That's how it's worked in modern financial history. Because if the interest rate is high, money says, I want to own that. I want to own the 4.5% Treasury versus owning gold, which pays me nothing. But nowadays, gold's holding firm. It's not like rising crazy in a crazy fashion, but it's not getting clobbered either. As U.S. Treasury 10-year yields are at, 434 basis points last time I checked.
So hold on, that makes a prediction, at least as my mind grasps it, that people think that the bank is going to default because, the government's going to default because if you're getting whatever risk-free money right now it's like something like 5%. If you can have risk-free money at 5% and people are not fleeing gold to get into that risk-free money at 5%, that says to my limited mind that the market no longer believes that it's risk-free. Is that an accurate assumption?
Well, no, the market, the U.S. debt is risk-free in a U.S. dollar perspective in a nominal basis.
Then why would people stay in gold?
Because they say, I'm not getting paid enough. right? Now I use a term of real yield, and if you ask an economist, you get a different answer depending on who you ask. My definition of the real yield is I take the government bond yield and I subtract nominal GDP, right? So if I'm lending money to the government, from a philosophical standpoint, I should receive at least the yield of the growth of the economy. So if the economy is growing at 10%, I should get paid 10% too, because I'm contributing to that, right? I'm lending to the government's doing its thing, and the economy is growing. I should get paid the same amount. Now, from the government's perspective, we're like, hold on, I can make a profit if I can somehow engineer the economy to grow at 10%, but I only pay you 5%. That's a negative yield. I the government, am making a profit. Or conversely, if the yield is 10% and the economy is growing at 5%, then me, the bondholder, is earning a profit. But right now, the economy in the US, if you take a look at the latest Atlanta Fed GDP nowcast, and they have a real-time guesstimate on where the GDP is running, nominal GDP this quarter is running around 9%. The 10-year yield is about 4.34%. So I, as a bondholder, am getting shortchanged. Now people are starting to realize it. Like, hold on, the U.S. economy on paper is growing like gangbusters. I should be getting paid more money. If I'm not going to get paid more money, then I'm not going to own these bonds, because I can own something else that's going to give me a better return, whether that's stocks, gold, crypto, whatever. Right?
Is gold,
AI tech stocks.
Just to take a non-controversial one, would gold ever outperform that number?
In terms of the yield?
Yeah, because the way you're explaining it, it sounds like people are cutting their nose off to spite their face. Like, if you're going to get 5% risk-free with a treasury and you're going to get next to nothing with gold, then why on earth would you, even if you could get 10%, even if you have moral outrage at the government for keeping half of that yield for themselves, which I admit, if you loan the money to the government, it's pretty fishy that they would keep that for themselves. But if you're getting a better yield than you would get from gold, what on earth are people doing? Just saying, I'd rather get nothing because I'm angry? I don't understand.
So, most people who own bonds are holding the bonds are priced, right? So as the yields rise, the bond price goes down. And so as yields go from 5% to, let's say, 10%, so the Fed just keeps raising rates, right? As a holder of the bond, you've lost money because the yields they're rising, the bond price goes down, right? So as yields rise, I lose money because I've locked in the lower rate and it's going higher, the bond price goes down, versus gold, which could go up, right? Or just could stay flat at the end of the day, and I'm fine. So if you take a look at returns of 10-year bonds starting in end of 2021, when the Fed started raising rates, you've gotten absolutely killed. It's been the worst bond bear market in hundreds of years, right? So owning bonds has been a terrible, terrible investment over the last 2 years because inflation is going up and the bond market's saying, actually, I demand more yield. And it just keeps going higher and higher and higher and higher to attract more and more buyers. Now, if the U.S. government was perfectly willing to put the 10-year treasury yield up at 10%, they'd have a flood of money into the market. That's awesome. I'm getting paid the same growth as the U.S. economy. But right now I'm not, because the government can't afford it. Right now, the treasury is already spending something like 34% of the budget's like interest payments on an annualized basis.
34%?
Yes. So it's like $1 trillion annualized right now is the interest expense as of second quarter, the last time the Treasury published a statistic. So they're issuing more debt and they're paying more money on the debt. And that number is just going like that in terms of the interest expense handed out to people who own bonds, right? But on the long end, and this is how bonds work, the longer the maturity, the more sensitive you are to interest rates, especially if the yield starts at a low level. Going from 1% to 5% on a 10-year treasury absolutely destroys you as a long bondholder, which is why a lot of these bond funds have done terribly over the last few years because of how bond math works. And it's a non-linear change when you raise interest rates and how the bond price performs. Gold is pretty much held constant over that time. You haven't made money, you haven't lost money, but if you were holding a long bond at 1-2% and now it's at 5%, you've gotten crushed. And that's exactly what happened with the banking system, SVB, First Republic, Silvergate, Signature, this year, they've gotten crushed on long bond trading.
Okay, I want to walk people through that. So when it comes to math, I have a very simple mind. You're going to correct me where I go wrong, but I think people at home, some of them are going to benefit from what I have struggled over the last year or so to put together in my mind. Again, when I go wrong, you need to jump in and let people know. But here is how I understand bonds. If you hold a bond to maturity, you're not going to lose your principal. So what you're losing is potential earnings. So you would not be able to sell that bond. So for those keeping score, it goes like this. You buy a bond. That bond has a interest payment. And that interest payment, let's say, is 2%. And if you buy that bond for 10 years to get the 2%, and a year later, a new bond comes out for 10 years that pays 5%, now, if you try to sell that bond in the secondary market, people are going to go, why on earth would I buy that? When I can, for the same price, I can get a better yield. And so you have sort of lost money in that you can't sell it before the mature date. You are now going to have to hold it all 10 years in order to get all of your money back. But if you hold it for all 10 years, you will get your 2% and you will get your money back, assuming that this is a government bond and they don't default. So that I want to make sure people understand the difference between you're losing potential revenue, because if you didn't have your money tied up in a 10-year bond and you could now put it into that other 10-year bond that's earning 5%, obviously you would be better off, but you don't lose your money unless you need to sell. Now that brings us, and you will notice he has not interrupted me, so I'll assume that's all.
I'll give an even more, even closer to home example. People who have a mortgage on a house, right? I think this is even more understandable. Like everybody rushed and bought houses in 2020, 2021, and the yields, 30-year mortgage rates in the US are around 3.5%. And now there's another job in another location, or maybe you're living in a high tax state, you want to move to a low tax state, right? And you need to buy another house. Same value of the house, the price of the house is the same, but you need to get a new mortgage. But now the mortgage rates are 7-8%. And you're like, holy shit, I can't afford this house anymore because this mortgage, this bond that I have at 3% is more valuable than the bond and the mortgage at 7-8%. Therefore, I can't find another loan that I can service with my income because of the change in interest rates. And so that's, I think, a even more hits home example of the majority of the public who own a house or an apartment or whatever. It's, I had a mortgage at 3%. I can't, in the same value of the house, I cannot afford that house in another location because I'd have to get a new mortgage at 7-8%. That is bond math. That's the exact, and you can put the same thing for, treasuries. Mortgages is a bit more complicated, but at a high level, that's exactly the phenomenon you're describing.
Now, the mortgage, though, would be completely inverse, right? So on a mortgage, I want my rate going down. On a bond, I want my rate going up. Yeah, makes sense. Okay, so now let's take that. So we understand that I buy a long-term bond, and back in 21, when all the banks gobbled up all this US debt, they had to go long to get a return, which a bank is incentivized to do. So they're going to take the deposits that they're getting. Everybody's getting stimulus checks. Everybody's depositing into a bank. The bank's like, amazing, I'm going to invest. First of all, the Fed is like, we're not going to raise rates. Oh my God, it's going to be like this basically forever. And so they buy all these long-term bonds on the word of the Fed that they're not going to be raising rates. So they think, okay, well, if rates aren't going to go up, then I don't have to worry about the value of this going down. This will get me a higher yield by me taking a longer term, which we need to get back to, because you were talking about how it's very atypical for short term to raise faster than long term. So that's a sign that something weird is happening. But in 21, that hadn't happened yet. So a long term was the way to get the extra interest payment. So the banks gobble up these long-term treasuries. So they're buying debt.
I'll add one little caveat here is you can actually hedge this stuff. So it's not as if there isn't instruments to say like, okay, I bought a bond at 2-3%. I'm worried about the future where the Fed raises rates. Let me go out in the market and hedge that. The banking system could have easily hedged a lot of this risk, and some banks did. A lot of banks didn't. But that comes at a cost. So I can either have a higher bonus or a lower bonus. The Fed says, don't worry, I got this. Inflation is transitory, never raising rates. We're never going above 2% inflation, blah, blah, blah. Why would I go out and hedge the long end rates? Why would I go out and hedge rates going up and reduce my bonus? So I'll stop there.
Dude, that's horrifying. If that, and look, I'm sure it did. I don't want to play naive, but that's horrible. Okay, so if that's right, then to get their bigger bonus, they buy these longer term treasuries, they lock themselves in. Now, the Fed does raise the interest rate. Now that bond, they can't sell it early, and therefore they're losing that potential income. Wouldn't necessarily be a problem, except for the fact that people begin to realize, hold on a second, now the risk-free rate of a US Treasury that I can get myself is 5%. So I don't want to leave it in the bank where they're paying me next to nothing. I want to go get my 5% risk-free with the government. So, hey, SVB, I will take my money, thank you very much. And now SVB has to cover that so that they can give you the money back. And now they're forced to sell these long bonds at a loss, and all hell breaks loose.
Yep, that's exactly it. The US government bankrupted the banking system, essentially.
That is brutal when said that plainly. Okay, so now my question is, they create the, I just had it, the BTFP, Bank Term Funding Program, which basically says, hey, everybody, don't worry, your deposits are safe. But the problem is that puts them on the hook for up to $4.4 trillion that they would have to print their way out of. So do we still have a banking crisis, or do we only have a looming potential inflation crisis?
There is a political choice. There, either, as people say, again, I haven't looked at the deposit rates yet, but if you are a non too big to fail bank, there's 8 of them. It's very hard to attract deposits, and it's very hard for you to raise your deposit rate because, again, you have this portfolio of stuff, and your deposits are not guaranteed. So if I'm a JP Morgan, a Citibank, a Wells Fargo, I forgot the other ones, the big banks, they have an unlimited deposit guarantee. Now they have to pay a bunch of other charges for that. But if I'm a depositor in those banks, I know there is no question. The politicians have told me I will get 100% of my money back, no limit. If I'm not in one of those banks, I have to think to myself, okay, is this bank going to get saved? Is this going to be the Lehman Brothers, or is this going to be the Goldman Sachs? Which one's going to be, right? They let Lehman fail. They didn't let Goldman fail, right? And so it's the thought. And so you're like, well, why even take the risk? Get me the fuck out of here. I'm giving my money to Jamie Dimon, right? And so that's the issue. People are fleeing because, number one, the political choice has been, we are not going to extend a blanket guarantee to all these other smaller banks because of moral hazard and all these different things. We're only going to give it to these banks over here. So then the rational response of the public is, well, I don't want to be in that bank. I don't want to have to take the risk that they decide that this is the bank they're going to believe in capitalism on. I'm going to go on over here. Let me go to socialism. I get my money back. And so I think that's driving part of it. And then the other thing is the rates are still going up, right? 5.5%, maybe the Fed raises a couple more times, maybe it'll be 6%. I can literally 2 clicks, go online, go to my money market account, deposit money with the government essentially, and get more money than my bank can mathematically pay me. So yes, there was a banking crisis. It was smoothed out a bit with the bank term funding program, but it's not as if people have stopped noticing that in less than 5 minutes, they can, go from 0% to 6% interest income. That didn't stop. So the banking crisis is still there. The acute political choice that the regulators and the government is going to have to make is still there. It's still looming. Who is going to pay for these losses on the bond portfolios of all these banks? I don't know what they're going to decide, but I think they're going to decide to print the money and make sure that the electorate gets their deposit back in nominal dollar terms. So that's just my opinion.
So the bank term funding program does not cover regional banks? I thought it did.
No, it covers banks that have eligible securities. So that essentially means U.S. Treasury bonds and mortgage-backed securities. Now, the big thing that a lot of people are now focusing on is the commercial real estate, right? That's not included. So it's not as if I lent money to some real estate developer in some market who's going to build office buildings. I can't take that loan right now and give it to the Fed and get back 100% of my money back. in dollars, right? I can take a treasury, I can take a mortgage-backed security, I can swap that for dollars. I can't swap commercial real estate, which is a problem because small regional banks were the engine of commercial real estate lending boom over the last, decades, whatever you want to call it. So now as we're changing the way we work and, 2 to 3 days work from home for a lot of folks, these office buildings are becoming kind of irrelevant and the market has frozen. So now it's a question of, okay, when deals get done, how big is the price decline going to be? And then are banks going to have to write down this section of their balance sheet and, oh shit, they're insolvent again. Or at least we know they're insolvent again. What's the Fed going to do? Are they going to expand the BTFP to include commercial real estate loans? Because this is the thing that's going down in price. Or are they going to expand it to auto loans? Or are they going to expand it to, personal loans? Like all these things that the banks have been lending out where the ability to pay or the asset value is declining that aren't US Treasury bonds and mortgage-backed securities. Is the BTFP going to be expanded to cover those? Because if those go down in price, the banking system's still insolvent, right? And so, yes, they've solved one portion of the market, the one they really, really care about, which is mortgage-backed securities. They want Americans to own a house and US Treasuries. They want Americans to invest in the government. Now, there's all this other stuff. They would rather not have to bail it out. But again, the banking system is choking on all this stuff. And they're going to have to make the political choice at some point. Either they're going to let the non-too big to fail banks actually fail, and a lot of, Americans with small deposits not get their money back, or they're going to come in and save the day and bail everybody out and print more dollars.
Okay, I think this is the part in our program where we point out exactly what inflation is. When it was first described to me as an invisible tax, I was like, it didn't make sense to me. And now understanding it better, I realized that what you're doing is you're saying, okay, we're going to make everybody's money worth a little bit less. So by making more of it, then the value of any $1 just reduces a little bit. And so it becomes a way to spread the taxation across everybody. So the real question the government is asking is, okay, this bank, whatever, they did something that isn't, so we already know that mortgage-backed securities and treasuries, those are going to be one for one. But if they have something other than that, they're asking the question, do we want everybody to have to cover this thing that didn't end up working out, this investment that didn't work out, or are we just going to let them roll over and die? As you look at that, and when you think about this 3 to 6 month big disturbance, is that the thing that you think happens, that we get something triggers a run on these small banks? Could be commercial real estate starts, something kicks off and it starts going down? Or are there other things on your bingo card other than the regional bank failures?
I mean, usually it's the problems are known. It's a question of whether or not we're focusing on it, and we being the market, right? So the market knows the commercial real estate's a problem, but we haven't really seen a big price markdown because no one wants to trade. The sellers don't want to realize a loss and then have to mark the rest of their portfolio down and thus be insolvent. And the buyers don't want to buy at this price because they know it's too high. So nobody's trading, right? So it's that calm situation where, okay, well, the price is still where it was, 12 months ago, but there's no transactions, right? So once there's a few transactions, when people have to sell for whatever reason, we don't know what that it's going to be, then we're going to go, then it's the fiduciary responsibility is, okay, well, there are these transactions in the market, and I now need to mark down my portfolio, report to my regulators, oh shit, my capital buffer is declined, therefore I'm insolvent. And what usually happens is, because of the politics, they'll let somebody fail. There's going to be at least one failure. And then the market's going to fucking throw a fit. Shit's going to be trading all sorts of fucked up ways. And then, on one weekend, they're like, okay, we can't let the next one fail, right? They let Silvergate fail in March of this year, but they didn't let SVB. And by fail, I mean Silvergate went bankrupt and the depositors are not guaranteed to get their money back by the Federal Deposit Insurance Company, the FDIC. Whereas with SCB and Signature and First Republic, they were bailed out. They being the depositors were bailed out. Now, obviously, the bank management was replaced and equity holders lost money, but the depositors were bailed out. So usually one person fails. There was a Lehman, there was a Bear before there was Goldman, Morgan Stanley, everybody else, Citigroup. So they'll probably let somebody fail first because the politics demand it. Once the fear of looming collapse is instilled in the regulators, they're then going to say, we have to print the money because the system is going to fail. What that's going to be, I don't know. I just see that for whatever reason, financial crises happen in the fall and in the winter in the northern hemispheric perspective, and so we haven't solved any of these problems. They're only getting worse. They're getting exponentially worse, and the countries that would usually bail out the American financial system by buying assets for their own reasons can't do so. And so as we progress further into this season where traditionally crisis happens, there's going to be something. I don't know what it's going to be. That's just my base case, and I want to prepare myself and make sure that I'm able to make money in a situation where shit gets all fucked up.
Yeah. Okay. I didn't know that there's a preponderance of problems in the fall and winter. Is that the obvious guess for somebody that's never heard that before would be it has something to do with energy prices as people have to crank up their
Usually, so in the
heating?
past, it was agricultural issues, right? So the farmers, the credit tightens in certain parts of the year, depending on when the farmers need credit to, buy more equipment to do the winter planting, right? They receive a bunch of money. Now they need to draw down on credit, and so that's why you get the spikes in credit as we move through the agricultural cycle, and that's part of the reason why you have different Federal Reserve banks in different districts is to try to smooth out that the demand and supply of credit between the banks in the east and the agricultural regions in sort of the center of the country. And every other country is kind of the same, right? Farmers are always in debt and they're always borrowing money and then receiving lots of money depending on how the harvest goes. And I think that's part of the reason why we usually experience crises in harvest season and then winter planting.
Now, you said the problem is usually known, but it's a question of whether the market's paying attention to it or not. What are some of the problems that you're already aware of, whether the market's focused on them or not, that could be those early dominoes that fall?
So we already know that the U.S. banking system is insolvent from a U.S. perspective. We already know that the major buyers of U.S. Treasury debt are not buying, and the Treasury needs to issue a lot of it. That's known. We already know that commercial real estate in the U.S. is a problem. It's just that nobody's trading right now because of what I just described. Globally, we already know that China has this massive real estate issue and is deleveraging, which means that China cannot contribute to global growth in the ways that it used to, meaning doing massive government stimulus and essentially buying stuff from the rest of the world to build up their country, right? China's been the economic powerhouse of global growth, which leads into the US and European economies, since the early 90s. They have lost their capacity to stimulate in the ways that they are used to. Japan has a problem. Either they're going to save their government bond market or they're going to save their currency. Japan is one of the richest countries from an asset perspective on their balance sheet. Are they going to sell down their treasuries, their fancy U.S. real estate, their equity positions to essentially help fund the ability for their central bank to manage the depreciation of their currency? So these are all known things. There's nothing hiding. Which one is the one that causes the spark for everyone to start focusing on and freaking out? I don't know.
I think the train wreck will happen so slowly that it might be more imperceptible than we think. How long can we print money before that bad thing happens in the bond market? And I'll set the table with Japan. As far as I know, they print money like fiends. Is there an obvious breaking point, or are we like at the 10% of what we can print mark, 90% of what we can print?
So let's use two countries. And the big narrative, and this is sort of the Keynesian modern monetary theory, MMT crowd, is the government, there's infinite capacity for the federal government to have debt. And the first example is, look at Japan. they have a, I don't know what the debt to GDP of at the government level is, like 300% or something. And look, this is perfectly fine. You go to Japan, everyone's nice, food's great, trains run on time, super safe, blah, blah, blah. What they don't understand is what Japan actually did. And there's a great report by Deutsche Bank, and I forgot what it is. And it's the label is Japan, the biggest carry trade ever run. So everyone always looks at the central government's debt to GDP and they say, oh, it's ridiculous. They forget that, they think Japan, if you've ever been to Japan and done any business there, you'll realize that Japan is a socialist country with capitalism that was hoisted on it. They're a very collectivist culture, and I'm not saying that in a negative way. That's just how they are. So you have to combine things that you otherwise wouldn't believe as one into one to get the real financial picture of Japan. So you have to look at, okay, yes, you have government debt. Then you have the corporate and private sector of Japan, the people of Japan. They own something like 3 trillion US dollars worth of assets around the world. Japan is probably the richest country in the world on sort of an aggregate basis, because what happened after the war? The US made Japan a colony for a bit, lent them a bunch of money, helped them get off their feet, and said, we're going to give you access to our market. Please sell us shit. The Japanese said, great, we're going to essentially subsume the individual and promote the collective. So everyone, we're going to financially repress you, but we're going to make really, really good stuff. You're going to have a job for life. We'll pay for your education, healthcare, cheap transportation, good food, work really hard so that these major companies can sell great stuff to America. And that's what Japan did. They started with America, then it went to Europe, then it went to China and Southeast Asia. They are the largest holder of US treasuries, which is just the savings of the nation. Plus, they own in total about $3 trillion of just assets, mainly in the United States, but around the world with all their savings. So if you add that back to their debt, and then you add back the private savings of people, which is estimated of like $5 trillion of just money and just sitting in bank accounts of the Japanese people because they haven't spent anything for the past 30 fucking years because of the deflation that they've been having, you get a much different picture. You get a debt to GDP of around like 100%, something much different. So Japan can print all this money because it owns the fucking world. They're not that broke. And so people say, oh, Japan just prints a bunch of money. It's okay. Yeah, it's okay because they were extremely productive. They had a captive market in that the richest country in the world, from a GDP perspective, America, they could freely sell anything they wanted into America. And that's how they got so wealthy. So that's a Japan example on the why it doesn't really work. Then you get to China. China says we're completely state socialist. Again, not saying that in a bad way. The central government owns essentially all the most productive companies. And we are going to debt finance our way out of the poverty of the 1949 to 1980s, right? Massive transformation in the society. And there wasn't an infrastructure project that China didn't love. And they've run up with something like a 300% debt to GDP. They built all this stuff. Now, if you believe that debt, you can print as much debt as you want, then why isn't China responding to this property bubble by printing as much money as they can and just doing the same thing they did for the past 20 years? Because they've reached the capacity of the amount of debt. They know that the more debt I spend, I produce no value, and I just make the problem bigger. I create more angst amongst the population. I create more desire for people not to have children. I create a declining population because people, cannot make ends meet because I've just overproduced and there's just not enough real return there. So there is an internal capacity. So China and Japan are probably the two examples that prove the point that I'm trying to make, which is there is a capacity limit for debt. It's not some number that we know once you go higher than this that things automatically happen. There's a paper by Ken Rogoff, I forgot what it is, and he did a study, and basically the study was that once you get above about 130% debt to GDP on a government level, then you're assumed to have a financial crisis sometime in the near future. Now, again, you can't put a time frame on it. The US is around 130, 140%. So it's on that path to doing so. Does it have capacity to load itself up with a lot more debt? Absolutely. China's at 300% GDP, right? So you can go that far, or even farther maybe. But again, then you start to have the decay in society. You get to have this moral angst that is amongst the population who feel it. They can't put their finger on why they don't feel confident or why they feel angry. But the reason is that the government has, again, taken away their dignity by fucking up the monetary supply. So again, I don't know what that number is. We're in the territory where something could happen. And so my thought is, as an investor, I want to be long that volatility by being long a put option on the sovereign bond market, which is crypto. I don't know when it's going to happen, but it's going to happen if they continue doing these same things. So why not buy something where I have insane upside if it fucks up? And what's my downside? It's a super liquid asset. As soon as if it's not working, then I sell a bit of it, whatever. So I have an asymmetric return.
Debt, the debt flywheel. How is it possible, given our need to, at a minimum, make interest payments, that we aren't already in trouble? So I think right now, our interest payments are already our third biggest line item. It's more than our national defense. We're adding $1 trillion to our debt every roughly 100 days. That will compound. So what takes 100 days now will be 95, and then 90, and then 80, and then 60. I don't understand how we're not at the end. What am I missing?
Because there's so much money trapped in the TradFi Western financial system, it's there to be inflated, it's there to be taxed. Every dollar you have in your retirement account, every dollar you have in your TradFi big account, every stock that you hold that is required to trade on the clearing functions of the US or the European governments is ripe to get taken by the government by an inflation tax. So that's how they're able to do it, because this capital is sitting around and not doing anything. The pension funds are forced to own government bonds. The banks are almost forced to take their excess reserves and buy government bonds. And so that's how they're able to keep the game going, because there's all this capital that's sitting around that they can inflate away. Now, that's why crypto is such a fundamental problem, because it's an escape valve. It's outside the system. I take my fiat, I sell it, and now I buy Bitcoin. Can't take it away from me. You don't even know I have it. And so that's why the ETF is such a key component, which is, okay, recognize that we have a problem. We're not going to change our spending. We don't want to outright ban the thing. Okay, now it's time to allow these fund managers to ingest this fiat into a derivative, but keep the Bitcoin within the system. So that is why you can afford to do this. And of course, the US is a reserve currency issuer, largest military in the world. Again, you have the ability as the empire to do this a lot longer than other countries can. Now, to the extent that other countries stop saying, I'm willing to sell you oil or food or whatever in dollars, then the ability to keep this game going, the time frame diminishes.
Yeah, what do you think about the petrodollar being used to have at least a response to our financial warfare, which may be a little unfair, but when we, for people that haven't thought through this yet, when we inflate the currency, that spreads it to people like Japan that own trillions of dollars in bonds. So we're exporting the inflation tax. Do you see people weaponizing that? Do you think, because I've heard people say, oh my God, de-dollarization is imminent. And I've heard other people say, get out of here. There's literally nothing else. So people would flee the dollar to what?
So I think that they're missing the point. So de-dollarization started in 2008 when the US authorities decided that they're going to save the banking system by this massive money printing. And if you look at the charts and you take a look at amount of gold that foreign central banks started buying, with the nadir was in 2008. Now it's ticking up. Similarly, for the effect of foreign central banks on buying US treasuries, the height 2008. Now it's tapering off. So de-dollarization is happening slowly at the margins. the Roman Empire, the British Empire. These empires didn't fall like overnight. It's not like overnight you just stop using these currencies. It's a slow process. It happens at the margins. We're already seeing it in 2023. 20% of all oil sales were in a currency other than the US dollar, highest ever. So the petrodollar is breaking down slowly at the margin. Of course, the Western world and the US major allies are going to continue using the dollar, whether China or Saudi Arabia or whoever uses it or not. That's not the question. The point of for an investor and trying to save is, okay, align myself with the trend, but don't get blown out of water if it takes a long time. If de-dollarization is a trend, if the trend is to have a multipolar situation of currencies being used, what do I know that central banks and countries have used in the past to trade between themselves to settle debts and trade flows? Gold. Okay, that's why I own gold. I own gold because I know the countries who are not going to use the dollar to settle their trade imbalances will use gold and are using more gold. I want to be alongside that trade. Okay, well, what about the people? The people don't want to continue to be fucked over by inflation, whether they're rich or poor. Here's a global decentralized digital system that anyone, rich or poor, can access. Okay, I want that system too. Another put option on the current, order of things. And again, I think people try to get moralistic about it, like right or wrong, like I believe America's good or bad. It doesn't matter. All I'm saying is we're going to change and I want to be long the change. And I don't know what it's going to happen in the future. I just know it won't be like it was yesterday.
Is there anything right now that is a plausible replacement for the dollar? Is it BRICS, I know, is trying to back their currency with gold. I think central banks are buying up gold. Is it a return to a gold standard? Is there another governmental currency that has more respectability, less inflation?
I would say that, in my view, the most likely outcome is that countries will continue to use the dollar or whatever currency is to trade amongst each other. So let's say that I have some oil but I also import food. So if I sell more oil than food I need to import, I say, okay, don't pay me the difference in dollars, pay me in gold. But I can still invoice my oil in dollars or whatever, depending on who's buying it. So I don't think there's going to be one particular global reserve currency. I think there'll be different economic spheres, and the trade between those economic spheres, the nets of that trade, will be settled in gold.
Interesting. Okay. Are you surprised at all that gold does not go up in a similar fashion to Bitcoin?
No, because gold is different. It's bigger door. Um, it's not digital. It's not the new thing. The drivers of gold are very, very slow and methodical central bank purchases. The crazy volatility in gold will be when, let's say that the U.S. government wants to help the situation. They devalue the dollar in gold and say, okay, I think the gold on the Fed's balance sheet is held at $35 an ounce, same price it's been since 1970s, right? They say now our gold on the Fed balance sheet is valued at $10,000 an ounce, which is basically them devaluing the dollar. Gold shoots up massively, and now all of a sudden, a lot of these financial problems go away because the Fed has so much gold, they're valuing it at a certain price, and now the dollar is seen as a stronger currency. So that's a situation that could happen, which would massively one-off increase the price of gold by 3 to 5x. And other countries could do the same thing, who hold gold at an artificially low value, but could revalue it higher on their own balance sheets. So that is probably the gold bull market scenario that I'm that's why I own the thing. That's the optionality that I'm playing, is a revaluation by central banks to make their currency seem stronger in gold terms.
Hmm. I've never heard that before. What would trigger that?
Oh, a war, budget crisis. I mean, the same things that, the government's done in the past, right? When the gold window closed, I think the FDR um, depreciated the dollar in gold terms by like 80% overnight or whatever it was. But obviously, you couldn't own gold as a person. He did it after that. So, okay, I'm going to take all your gold. Now I got all your fucking gold. Guess what? The gold is worth way more dollars now. Sorry. So I think that's a sort of a situation that could occur.
Okay, let me see if I understand this. I don't understand this. Why would you want to make gold more expensive? What do you plan to do with that? Buy more gold? Buy more dollars? Like, what are you doing?
No, you already have a bunch of gold. So at least the US is a very stark example. The US Federal
Yes.
Reserve has however many metric tons of gold, a lot of it. It's held at, I think it's $35 an ounce or whatever that price is, a very low value. Gold right now is valued at
But are
however
they
many.
artificially holding that price down?
They're not holding it.
Or
They're
is that
saying this is what we value gold at. So this is so our balance sheet. If you think of, like think about what's a dollar worth, it's worth the assets that they hold. What's the only real asset that the federal government has in a monetary sense? It's gold. How much gold do
okay?
you have? What do you value it at? So US being the reserve currency issuer could say overnight, we think that gold is worth $20,000 an ounce. And guess what we have? I don't know how much they have, but and so all of a sudden I was like, oh shit, they've just devalued the dollar in gold terms, but they own a bunch of gold. So now the dollar, instead of being a US Treasury backed currency, and the US Treasuries are trash because of all this spending, it's now a gold backed currency. And guess what? They've got a lot of gold and it's worth $20,000 an ounce.
So hold on. Sorry. My brain is just too small for this, but I really want to understand this. So are you saying that they are repegging the dollar to gold in this scenario?
Yes, well, it wouldn't be a peg per se. It's what do you think a dollar is worth? Right. If you believe in this de-dollarization thing and that country's like, I don't want to hold the dollar because it's inflating away, it has no value, it has no assets backing that. I don't believe in the US treasuries. Well, then the federal government and the Fed could say, oh, actually, guess what? We've got all this gold. It used to be worth this. Now it's worth that. This new price that we believe gold is worth is massively above the current clearing price of gold. For certain individuals, we'd be willing to exchange gold for dollars. Not everyone, obviously, only certain individuals, certain probably sovereign nations. And all of a sudden, the dollar becomes a strong currency again because
But why on earth would a government do that? Like if I saw that you just changed the value of your dollar massively, why then would I exchange gold? Because I'm thinking, ooh, dollars are still great. I still want to have dollars and I have gold. And so now I'm going to get those dollars. Like to me, again, I'm sure I'm just missing something, but to me, I would see that as such a wild manipulation of the currency. I'd be like, I don't want anything to do with a currency that just changed
great.
3 to
Then you
5x in
should go
value.
Bitcoin. But this is how fiat currencies have worked in the past, and this was done in
But
the 19.
what's the incentive? Is it
Because
that
you
the
have to devalue
person?
the currency. The U.S. needs a weaker currency. A weaker currency helps you sell your exports.
I get our
Weaker.
incentive, but something is only worth what someone else is willing to pay. Why is someone else willing to trade their gold for dollars in that scenario? Obviously, someone is, or they wouldn't do it.
Well, no one has to trade anything. I'm saying the government itself says that we believe gold is worth this price. Right now, they say it's worth $45 or $35, whatever it is on their balance sheet. Now it's worth, we will exchange gold at this price, way up here. And they're able to do that because they own a fuck ton of gold. If you didn't own a lot of gold, then I would agree with you. Why would you do that? This is more with a way to engender a belief that the dollar has a large gold value. Well, okay, here's what we value gold at on our balance sheet. And we're able to do this because we're the central bank and you can exchange gold at this price now. It's much higher than the price that it is around the world. Now, that only works if you have a lot of gold. US has a lot of gold, China has a lot of gold, Russia has a lot of gold. So there is a thinking out there that any number one of these countries that have been accumulating a lot of gold could say, our currency is very strong. Guess what? We're willing to bid for gold at this high price. Therefore, sell me oil in my currency because you know that you're going to get gold at a very attractive price because this is what it's worth. Sell me medicine, sell me wheat, whatever it is. So it's a confidence game amongst other trading partners to say my currency is worth a lot of gold because gold has historically been the real currency of the world, not these fiat things.
Man, again, so that seems false. What you're saying is my gold is worth a lot of currency, my currency is worth a tiny bit of gold. If my currency used to be $35 buys you an ounce of gold, and now it's $1,000 buys you an ounce of gold, the gold got expensive. The currency devalued in its purchasing power. Anyway,
But I also have
the
a currency
audience is
debt
probably
though.
tearing their hair out right now. Say that again.
But I also have trillions of dollars of debt. So now my currency is devalued in gold terms, but I owe a fixed amount of debt, right? So the reason why, another reason why you devalue your currency is, well, I owe a lot of it. I owe a lot of it, and now it's worth less. I've decided it's worth less, so I can pay you back. But you're getting paid back in depreciated dollars. Now, obviously, going forward, people who trade going forward have a different deal than people who have traded stuff in the past. So again, yeah, I agree with you. It's a fucked up way to treat people who invested in your bonds. But again, it's another option that you can use as a sovereign country, is devaluing your currency in gold terms to pay back an unsustainable debt load. If you don't want to outright default by saying, I'm just not going to pay you back. Instead of saying that, you're saying, okay, I'll devalue in gold.
I'm going to say, psych, it's worth like 1/10 of what you thought it was worth. That's crazy. I can't believe that they can do that. Insane. Okay, let's talk about all the liabilities since we're on the subject. Do you think that the US, so going back to this idea of Argentina comes in, they slash spending, for the US to get back on track, they would have to slash spending. Social Security is basically a pyramid scheme. Would they be wise to lop off Social Security? And could you see that actually happening with any sort of political plausibility?
In the United States, given that boomers are more politically active, I would say that it would probably be a death sentence for most politicians to try to take away those health benefits. Now, a very skilled politician who's able to get a lot more younger people out to vote and explain to them how they've gotten fucked over by the old people in the country, if that person's able to do that and put in that kind of work, then yes, I think that, a reformation of the United States' healthcare system could be on offer. But if you're not willing to put in that sort of political work to re-energize the younger constituents, there's no fucking way you'll be able to do it.
Did you see the video that Ben Shapiro posted about retirement and Social Security?
No.
It's very interesting, lighting the internet on fire. And he basically said, look, Social Security is not going to play out the way that you think. You're probably not going to be able to reap the benefits. Not with people retiring as early as they are. You should, look at pushing retirement back or removing retirement altogether. If you look at managing a fiscally responsible country, is that an option on the table for you, or do you think that there are better ways to get that done?
Absolutely, you should remove. I think these programs are great for the people, the boomers, right? They're the biggest beneficiaries of all these, around the world. These sort of like Social Security programs, depending on how you pay for them, and removing them would remove that dead weight. But I think at the other end, you also need to sort of reform, like, global sick care, which is the health industry and the misaligned incentives, right? People shouldn't be dying the way they're dying based on the shitty food that we eat and the overprescribed medicines. There shouldn't be, and that's why people think, oh, I need to have this health care because everybody gets sick. Why does everyone get sick? Because we eat fucking processed food and all this dog shit that's, put out to us as healthy. There's a reason why everybody spends the majority of their money in the last like 2 years of their life dying of horrible cancers and heart disease and all this kind of shit, right? We're poisoning ourselves every single day with these fucked up food chains. So I think it's not just let's remove the retirement benefits and the healthcare as well. Let's get at the root problem of why do we treat people the way we treat them in the healthcare systems around the world. Let's have a better relationship with food.
Yeah, one thing I don't think people really understand is that you can, obviously, because we print to make all these problems go away, but if healthcare costs, let's say 10x what it needs to cost if people were actually healthy, you are quote unquote bankrupting the country, and that you get to a point where there's no way that the productivity of the country could possibly match that. So you've got the interest payments just absolutely insane. You've got sick care management insane. You've got Social Security, retirement. All of it becomes really unmanageable. Until recently, I had no visceral relationship with how those expenses actually played out in terms of the budget until I started looking at how much the government spends versus the actual GDP of the country. That stuff gets very scary. And that's why we race towards war. We flood into crypto. It all comes back there. All right, then let me ask you, where does ETH go? We've talked about Bitcoin. Where do you think ETH goes from where it's at now?
Oh, maybe 30, 40,000.
Whoa. That's mahusive. What do you think gets us there? Just the knock-on effect of everything that happens to Bitcoin has a trickle down to ETH?
Trickle down. You have the ETH ETF, possibly the Ethereum is the decentralized computer, and the decentralized computer has a commodity, the ETH, the currency that pays an intrinsic 4% yield, which is the staking yield of ETH. It's the only, crypto asset of that size that has this intrinsic yield. And that's going to draw a lot of, it's the internet bond. It's the bond of the internet computer and pays you a yield to own it. And so I think that's going to be a very powerful narrative as people start to think a bit about more about what ETH actually is. And they're going to allocate and say, oh, well, not only do I get sort of this deflationary network value increase in the ETH, the currency, I'm also getting paid 4% yield in ETH. Where else do I get that sort of return? That's great. I want to allocate to this. And there's all sorts of different interest rate strategies you can do around that. But I think that's going to be a big narrative for people who are going to get into ETH and understand, oh, great, I get to participate in, let's create a new digital internet on DeFi and I get 4% yield.
Why do you think that right now ETH seems to be more to the upside? I don't know if this is true to the dollar, but it seems to be more to the upside than Bitcoin. So I'll see Bitcoin dip, but ETH just keep going. Not that it hasn't had its own dips, but are people pricing in the future in a greater way than they're pricing in the reality of Bitcoin today?
I don't think so. It's a smaller asset, right? So smaller things move faster, just law of large numbers. So I'm not really, I don't think so.
So do you think its rate of increase will speed up if an ETF goes?
For sure. Just like Bitcoin, just more assets. And, if people are actually using the Ethereum network post the merge, it becomes the supply of ETH actually declines. So there's less ETH available the more people use the thing. So if we believe in DeFi and the network activity grows in DeFi because more people know about it, they want to experiment, then not only the total supply of ETH declines, and then you have the ETF, taking ETH out of circulation as well. So you get sort of a double whammy effect on sort of the price on the upside.
The narrative that I've been hearing is you're going to get big gains in Bitcoin, you're going to get bigger gains in ETH, and then you're going to get even bigger gains in Solana. Is that just, one, do you agree with that narrative? And two, is that just a law of large numbers? Or is this people seeking out the highest volatility, clearest narrative assets?
I guess timing is everything. So we think about last cycle. So Bitcoin went from 69,000 down to 16,000, right? Solana went from 250, I think, to 7. So yes, from 7 to 250 is going to be a bigger return from 16,000 to 69,000, right? It's the path dependency of returns and the time in which you get in and out of an asset. So you could make much more money on Solana or some other much lower market cap shitcoin than you could make in Bitcoin. But if your ass doesn't get off the train at the right time, you're going to get absolutely wrecked. Versus Bitcoin, you might get wrecked, but it won't be as bad as going from 250 to 7. So again, it's one of those things, right? Yes, you can make more money in lower market cap shitcoins, But if you don't time it right, you're going to lose more on the downside. So you have to sort of balance those two together.
All right. As a trader, you seem very comfortable with what I'll call trading on culture, trading on trends, momentum. Because when I talk to people about why I'm a believer in Bitcoin, why I'm a believer in Ethereum, I can say very robustly that I have a thesis around where the world is going, and those are going to be long-term adoptions. They're not fugazi, as you have said about other things, including the TradFi system. There's just something really intrinsic about them. Now, there's a flaw in the Bitcoin thing if it can't, whether it's ordinals or whatever, whether it can't become another thing, which it has that sort of looming specter. But that narrative, digital gold, it being the store of value, makes sense. Ethereum, world's computer, it's a bond in the distributed world's computer. Cool, those make sense. Beyond that, when you get into NFTs, maybe Solana, although if they can speak to maybe gaming, Web3 gaming or something like that, then there could really be a core thing there. But I have a feeling that's not why you're trading on it, that this is really just about, people get hyped about a thing. I'm able to read the tea leaves. I see what they're getting hyped about. I know the signs to get on the train. I know the signs to get off the train, and I trade on that. Is that an accurate assessment?
Yeah. So I believe that I have at least for the assets that are large in my portfolio, I have a fundamental understanding of like what they are, what they're not. And I can trade on the narrative and know when the narrative gets out of whack with what they fundamentally are, then maybe it's time for me to step off. Versus I don't understand what these things are. I've never read the white papers for Bitcoin or Ethereum, or reading research from very much smarter individuals on the like technical things that are going on. I just know what I read on Twitter. Your ass is going to get wrecked because you don't even know whether you're believing in something that's true or false. At least if I know I'm trading a piece of shit, I know it's a piece of shit, and I'll size my position accordingly.
That's interesting. Okay, so everything is gambling. Getting in the elevator versus walking up the stairs is a gamble. I think that people would do well to conceptualize all of investing to an extent as a gamble. The reason that I think that Bitcoin specifically and crypto in general will be here is I believe that tomorrow is going to be more digital than today. I believe that every generation grows up like a fish in water. And when you're born and crypto is just a thing and you don't even think about it, it would not make sense to you that that is somehow less valuable than fiat money, especially when everything you do, you buy your skins in video games, and to you, those are as valuable as your real clothes, and you love them just as much. And so, when I think about kids and V-Bucks, they're just digital natives, like through and through. So I think for them, it will just make all the sense in the world. And so once something is digital, then why wouldn't you want your money to be digital as well? Then it becomes a question of control, because, hey, the government will be more than happy to come out with a CBDC, and that then collides with freedom. So I don't know how humanity is going to answer that question. I'll be completely honest. When I think people like being taken care of. I think there is like when you read the rhetoric from 1776, like those guys were ready to die for freedom. We're not there. We're not there. Like right now, it is just a different time, man. And so I think people will want the convenience of something digital. I think money will be digital. I think people will live in digital worlds. I think they will buy digital goods. But I don't know where we're going to settle on a desire for protection. Like even myself, it wasn't until SVB looked like it was going to collapse that I finally was like, I should just I didn't have any direct exposure to SVB, but it made me just take everything off every exchange. But then when you look at the realities of cold storing and you realize that you have to store them in different places and not at your house, and it was like, oh God, like I still feel so paranoid. I'm going to forget where I put something, or half of my key, which is in, this place. Like I forget which one has what. Oh God, like that kind of stuff terrifies me. And so what do you think about that? Do you think that people will truly, while they'll embrace digital money, I think most people will agree to that. Do you think they're going to care enough about money privacy, which is something I've heard you talk a lot about with Bitcoin, will they care enough to make Bitcoin, which maybe is trying to be choked by the government and all that, will they do it, or will they just take their CBDC?
So I think most people don't care about privacy. And that's, I know this because they have a mobile phone in their pocket, a smartphone. The smartphone is tracking you. We voluntarily have given the most amount of information about ourselves to Facebook, Google, Alibaba, WeChat, all these things, right? Because we want community, we want to communicate with each other, we want to look at thirst traps, whatever the reason is, right? We've done this. No, the government didn't force us to do this. These were private companies creating these products, right? So most people, as you said, it's just too much to be financially independent, to actually be your own financial institution. For a lot of people is just too much, and they're going to stay in this system. And I like to say that there's a flood coming, this inflationary maybe pseudo collapse of the fiat financial system. There's a Noah's got an ark of Satoshi down there with Bitcoin. Unfortunately, most people are going to drown because this isn't for them, right? And so when you move it up to the government aspect, crypto in itself isn't a problem. The problem is that the people own it, and it's not the standard individuals and firms that are used to owning the new levels of technology. And that's their issue with it. And so now we're seeing that the experiment has worked so far. We have however many millions of wallets created. We have however many trillions of dollars worth of transactions that have been completed on these systems. They work. It's more sound than the traditional finance. It's faster. It's cheaper. Fine. Well, let's not have a bunch of Muppets running around the world who are a bunch of old bald dudes sitting in New York, London, and Paris, and whatever, owning this thing. We want to move it back to who should be owning this. So we're going to now allow the traditional financial players to launch things like ETFs, right? Which is a very easy way for everybody to own the financial return of Bitcoin. Very important, I say the financial return, not actual Bitcoin. As you said, I don't want to manage private keys. I don't want to worry about where I put my wallet. I just want to earn that inflationary protection aspect of Bitcoin, but I don't necessarily care to really experience the real financial freedom of it, of owning my own financial system in my pocket, in my head, right? So I'll just put some fiat into the BlackRock ETF, the Fidelity ETF, or the pick your large asset manager, wherever you're from, ETF, right? You don't own Bitcoin. You don't care about custody. You're like, oh, the price goes up and down on the screen. I've beat inflation. But guess what? My money, when I want to sell, comes right back into fiat, right back into the banking system, right back ready to be financially repressed to make sure that bonds are purchased by the banking system to keep the governments afloat. Now, fine. Bitcoin is an open architecture. Everyone should be able to build whatever financial products they want. The question then becomes, and I don't know the answer to this, is will so much value and currency be owned by these centralized asset managers who are essentially arms of the TradFi ecosystem that the underlying fundamentals of what Bitcoin is, the privacy, will those be altered? Will a BlackRock support through maybe ownership in large mining companies, different sorts of improvement protocols that detract from the immutability of the money, or the censorship resistance, or the decentralization, right? So while we as traders are cheering, yes, ETF is going to bring all this money into the system, because now people who want to escape inflation understand the value prop of fixed supply and all that, but just don't want to deal with the technology aspect of a cryptographically bearer asset, because community goes bad with passwords and whatnot. People don't want to deal with that. They want to put their money in the ETF. And we're like, yes, great. More money in the system, number go up, everybody's rich. But are we inviting in something that's going to fundamentally change what Bitcoin is? Because now they're going to have a say through large ownership in mining pools, or they're going to run a bunch of nodes, or they're going to have control over the price, right? It's an open question. And this is going to be the real crucible we're going to have to face as an industry of determining what is Bitcoin, when now we have TradFi, who is a stakeholder in this system. How do we deal with them? How do we maintain this ethos that makes Bitcoin valuable, this immutability, this moneyness, the hardest money ever existed, with a system that is basically trying to capture as much capital and sequester it so that it can pay the inflation tax to make sure that the government stay afloat. I don't have the answer to that, but that is the real, crucible that we're going to have to face in going forward. Because, as you rightly point out, it's just pain in the ass to be your own financial institution.
It's interesting. That one feels easy to me. I don't. If the money really stands for freedom, then you have to let people do what they're going to do. I saw this in Web3 a lot, and there was a sense of like, we, the vanguards of Web3, are going to decide who is Web3 enough. And if you don't pass the purity test, then, we don't want you in here. And it's like, you're never going to be able to get something to scale by trying to impose culture top down. Culture is always, and I mean always, going to arise from the bottom. And you can manipulate it through media and stuff like that. But at the end of the day, man, that what people internalize is going to become the culture. The youth will always get whatever culture they decide they want. Like it is just an unstoppable force. And yeah, to me, it's like Satoshi created the thing, and then the thing's going to become what the thing becomes. And if there is a way to control it, then it will become no better than the thing that it's trying to replace, which is already something that's being controlled. And the whole point is, you think you want to be able to control it because you think you have all the answers and you're going to do everything right. And the reality is, as soon as somebody can control it, then they will control it and use it against you, which is the whole point. Like, I mean, just to get myself in hot water here, when I saw what was going on with the Canadian trucker convoy, I was like, yo, they are freezing people's assets that donated to a cause. Like, that's crazy. I couldn't believe it. That really got me way more interested in having something that I could control. Now, I'm not convinced the government can't use force to get what they want out of crypto, because at the end of the day, look, if the government puts a big enough gun in my face, here's my crypto. So, I get it. It's easier. And if I leave before they start breaking out the guns, then fair enough. But God, I don't even want to contemplate a world that gnarly.
Yeah. Hope it never comes to pass.
You and me both. So I have to ask, where do you think Bitcoin is going? Is this something that, breaks 100,000? Is this something that breaks 1 million? Is Michael Saylor going to be a hero or the world's biggest L? What do you think?
So my working model is that, we're going to continue chopping around 25, 20, 30,000 this year. As we get to some sort of financial disturbance and people recognize that real rates are negative, if government are growing, if the economy is growing at a nominal rate of 10%, but I'm only getting 5%, 6%, even though it's high, people are on the margin going to start buying other stuff, crypto being one of those things. So coming into 2024, either we get a financial crisis, rates go to zero, or we keep raising rates, but not as fast as governments are spending money because they're just trying to keep people doing things, and the rates are negative. That we get to crypto around 70,000 by the end of 2024, and that's a combination of the crypto halving event, right? Maybe there's going to be a few ETFs launched by large asset managers in the U.S. and Europe and China, or maybe Hong Kong, to be specific. So we regain the all-time high by the end of 2024, and that's when the real fun starts, right? That's when the real bull market starts. And so my mental model for where we could go, I think we're going to go somewhere between $750,000 to $1 million in Bitcoin on the upside, right? And we're going to, whatever the level is, there's gonna be a round number everyone's gonna be focusing on. I guess like Bitcoin hit 69,999, didn't hit 70,000, and then it's gonna go and just crash, 75, 80, 90%, whatever it is, right? Doesn't matter. But yeah, so my upside target ish is sort of the $750,000 $1 million level, 2026 time frame. Just because, again, I believe this is going to be the largest market in bull market in financial assets we have ever seen in human history. So not only will Bitcoin be at a ridiculous price, NASDAQ will be at a ridiculous price. S&P will be at a ridiculous price. Pick your, stock indice wherever if you're not in the Europe or the US, that'll be at a ridiculous price, right? Certain types of property, ridiculous prices. So we're going to have a lot of ridiculous prices out there, and not just in crypto.
Yeah, that will be a weird moment. And with people thinking that the party is never going to end, of course, it always does. Let me ask you so that I can help better understand the sort of way that this all plays out at the global level. What is with Hong Kong and crypto? China clamped down really hard. It seemed like that was a really bad sign for me. I was like, whoa, this was the thing that I was concerned about, that a government would be able to effectively eliminate it from its country. Not that they'd be able to
China
kill
never
it,
eliminated crypto. They never eliminated crypto from China.
Tell me more.
So if you want to think about from the Chinese government perspective, the thing that they care most about is social stability, right? And so as everyone becomes a speculator because they're desperate, right? The last thing they want is a bunch of mom and pops rolling up and gathering in groups with a communal grievance. It could be crypto, it could be anything, right? We know how this story has played out over Chinese history. They do not like this. And so seeing that, that could cause disturbance in China, and also you have the energy aspect of Bitcoin mining consuming a lot of electricity that could be used to do other things. They basically made it very hard to trade it. So the exchanges all left. Chinese people still own Bitcoin. That hasn't changed. You can't mine it. There's no exchanges. Fine, they can't really acquire it. But at the end of the day, I think the Chinese government sees that this is a technologically sound thing, and they want more of it in the Chinese diaspora that they can control. It doesn't necessarily need to be in a government coffer, but the Chinese government thinks if you are Chinese, we own you as a person. You are Chinese. We are the Chinese government. Therefore, you are our subject, no matter where you live around the world, ethnically speaking. And so if you think about Hong Kong, which is part of China now, and always was, but now it's very explicitly part of China, but it has this Western Eastern capital meeting point. If they want to experiment in allowing a more general ownership of crypto, or if they want to allow certain types of Chinese individuals to own crypto through Hong Kong regulated financial institutions, which essentially means that they're controlled by the Chinese government in the same way that BlackRock is controlled by the US government. It's no different. Then they're going to allow these companies to buy and hold crypto. Because at the end of the day, as long as the crypto is inside of China, they believe that they can control it. So why not let a part of the country experiment with this thing, let people own it, let people buy it by controlling it in terms of the way firms are able to acquire users and let those users on crypto. So that's why there's been licenses issued. The Hong Kong government's very positive on Bitcoin. The Hong Kong government is part of China. Therefore, they would never do this if it was not blessed in Beijing as part of a national prerogative for this particular part of China to be positive on crypto. So it's a similar sort of situation to how I describe the BlackRock ETF, right? Larry Fink and BlackRock having $1 trillion of Bitcoin under its custody is the same thing as, Bank of China launching an ETF on the Hong Kong Stock Exchange and having $1 trillion of crypto. They're both essentially in the orbit of either the United States or China. And that's the goal. If this technology is as transformative, if it is the hardest money that's ever existed, wouldn't you rather your citizens have it rather than someone else's? And so as the American political establishment decides what they want to do with crypto, and that uncertainty drives companies out of America, out to the rest of the world, China's already gone through that. They've already purged the exchanges, starting in 2017 and culminating in I think 2020, right? Now they've gone the other direction. Okay, let's try to control this. Let's try to permit certain types of ownership through firms that we can control in Hong Kong, which is our testbed region for sort of, financial innovation, and give the Hong Kong economy something to draw in to expertise, foreign capital, because Chinese government believes in technology. Crypto is a forefront of financial technology. Why not bring these smart people here, let them experiment, and we think we can control what they do, right? So that's, in my opinion, what's behind the Hong Kong story. We're going to see how that progresses. I obviously live in Hong Kong. I love Hong Kong. I hope that there is a vibrant cryptocurrency ecosystem there. and that people are able to experiment with different things because there is, a tacit government support for this technology. We'll see what happens, at the extreme. If, all of a sudden there's all these firms with, trillions of dollars with crypto, I don't know. But at least there are some people who are given the space to at least experiment and try it versus other places in the world where they're being pushed out and shunned.
Yeah, I'll be very interested to see how it plays out. I was super intrigued when China opened that back up in Hong Kong. It made me realize, okay, maybe they're not as negative as I thought they were. And like you said, this is really an element of control, which does make me super uneasy in terms of just governments having more control than I am comfortable with. But I fully recognize that the way that it's looked at, and as somebody who lives there, you can certainly speak to this better than I can, that it's not necessarily one is better than the other. They are just different. But man, from my perspective, it just seems better to be free. But I won't try to export my values. So one thing that I want to get a better understanding of is I had Peter Schiff on the show, and in the comments, because he was like right down my alley in terms of all my fears. Like he was right there. Everything that, if I'm honest, he comes very close to articulating exactly what I think is going to happen when I just objectively look at the math of all this. And then one of the comments in the feed was, Peter Schiff has predicted 9 of the last 2 recessions. And I had to laugh at that. So, the backdrop to our whole conversation has been a sort of mutual acceptance that, yeah, all hell is probably going to break loose, that we think we have a pretty good handle on just the physics of the math, and that it can't go up forever, that using my analogy, you will pull this rubber band back until it snaps. There's just no way around it. What if we're wrong?
So what if we're wrong? Well, if we're wrong, if there is a energy miracle, like we discover some form of energy, we instantly commercialize it. Like think of how long it took for us to get to a car in every household in the US. Think of how long it took us to electrify the world, even though these technologies were created in the 19th century.
But that already assumes we can't have a soft landing. What if they get it right?
If they get it right, then you earn what you earn now, right? The S&P is up, I don't know, let's remove the tech stocks, right? It's up, I don't know, 6, 7, 8% this year, or whatever it is, right?
At what
I could have made the same amount.
You could have
I could take the same amount. I can make the same amount in bonds and literally overnight lending to the Federal Reserve. Zero financial risk. I get paid 5.5%, 6%. Why take the risk? If they get it all right, great. I'm getting 2/3, if not 75% of the return in the US stocks, with taking none of the mark-to-market risk. So it actually makes 0 sense to own stocks if you believe they're going to get it right, because stocks aren't returning enough. It's not like the S&P is up 25% and cash yield 6%, right? So from a risk-adjusted perspective, if they get everything right, then okay, maybe the only stock I should own is NVIDIA. Fine. The rest of the market's dog shit. Why even play the game? Put your money in a money market fund. Take your money out of your 0% yielding bank account, put it in a money market fund. There's just no point to trading stocks if they have it all right.
What would have to be true for you to say, yeah, I no longer think there's anything looming on the horizon. There's no financial crisis coming. They'd have to get, I assume, the debt to GDP down below 130. I assume they'd need to start pulling some money out of the economy without it causing any sort of secondary knock-on effect. What else?
Well, so the U.S. government right now is running the playbook they should be running, right? Which is nominal GDP is at 9%, but the government debt yields 4.5%, call it, right? So the government's making money. If it can continue to keep money in the bond market, in the banking system, at these rates and at this growth level, then the US government, at least for them, will deleverage themselves over time. The problem is that capital can move. So we're making the assumption that capital doesn't move. So for the Goldilocks scenario, number one, no capital leaves the long-term bond market when they have a negative real yield, right? Number two, there is a energy miracle, or we decide that nuclear is the next thing, and we run out to invest in all sorts of different types of startups to basically miniaturize nuclear reactors such that instead of pumping oil into our car, we have a small little nuclear reactor and that powers our vehicles, or we're going to build all these different power plants. Like that needs to happen, right? Immediately. Those are the things that would say, okay, maybe I'm wrong, and we're going to have sort of an acceleration in energy productivities. Therefore, I should own a company that makes real stuff apart from, semiconductors. Otherwise, I'm just putting money in overnight bonds, because at the second they cut the rates, cool, I don't care. I didn't lose any money. I just take the money in the bonds and I go buy stuff, right? But I'm definitely not going to own long end bonds. That trade is negative EV, negative expected value in my perspective. I don't see how they get all these things right before money leaves the system saying, fuck this. I want 9%, not 4.5%. So why own the long end? Just put all your money in short-term bonds. If you believe that they are going to solve everything, just put your money in short-term bonds and take no risk.
To hear more about Ray Dalio's warning on the upcoming recession, which we're almost certainly already in, watch the full episode here. Talk to me about the three forces that you see that are influencing this moment. We've got banks collapsing, US dollars under attack, looming recession. What